Good evening all. Okay. So to continue with our discussion, like yesterday from ITC chapter we have completed like section 16, 17, subsection 5, then about like where a capital good is transferred, 18 subsection 6, and then 17 subsection 4 with respect to banks, NBFCs, financial institutions, that part. Now 17 subsection 1, sir. It's okay, please listen little attentively here. Goods and services used partly for business purpose, partly for personal purpose. Then we can avail ITC only which is relevant to business purpose. And then goods and services used for making taxable supply and even exempted supply. Then we can avail ITC only which is related to taxable supply. Then 17 subsection 3. Okay, here they given a broader definition for exempted supply. So usually exempted supply means nil rated supplies, non-taxable supplies, and supplies which are exempted by way of notification. Once again, sir, nil rated supplies, non-taxable supplies, and supplies which are exempted by way of notification. Those are called as exempted supplies. But here, for the purpose of this ITC chapter, exempted supply definition has a broader coverage. I mean, all these are also to be treated as like exempted supply only, and these are excluded from the definition of exempted supply. See, exempted supply for the purpose of ITC includes RCM outward supplies. So RCM supplies also to be considered as what? Outward. Sir, RCM, sir, understand, this person here, let's say we'll take his name as A. This person is making supplies which are taxable under RCM. That means he will not pay tax. Who will pay? His recipient will pay the tax. So these are called as what? RCM outward supplies. They also to be treated as exempted only for this purpose. Next one. Transactions in securities. Actually, securities are neither goods nor services. But for the purpose of this definition, if, sir, this A, he do business, let's say he is like a cost accountant, he do tax practice and even do share trading. Okay, then what they are saying, like even transaction in securities, I mean in securities how much ever transactions he do, that also to be includable in his exempted turnover. But how much? 1% of the sale value of securities also to be included in exempted turnover. First one, RCM. Second one, transaction in securities, not the whole value, sir. Out of the total value, 1% counted as exempted turnover. Then, sale of land or sale of building where entire consideration is received after completion. Actually, this is covered in negative list. Sale of land or sale of building where entire consideration is received after completion. But here this section asks like what? For the purpose of exempt supply with respect to ITC availment and all, this also has to be considered as what? Exempted supply only. Sale of land and even sale of building where the entire consideration is received after completion. 3. Then fourth one not relevant, sir. Fifth one, supply of service by way of accepting loans and advances, and consideration is in the form of interest or discount by banks, NBFCs and financial institutions. Understand, sir? Supply of service by way of accepting loans and advances, and consideration is in the form of interest or discount by banks, NBFCs and financial institutions. Sir, in the supply chapter itself I said interest and discount is exempted. So that is anyhow exempted only. So what they are saying, they are also saying like included in the exempted turnover. So what service they said? Service is like giving loans and advances, and for that consideration is what? Interest. Okay, so interest and discount they are asking to include in the exempted turnover, but only to whom? Banks, NBFCs and financial institutions. So 4 extra points this section is asking to include in the exempted turnover. What are those? First one, RCM outward supplies. Second one, if you do transaction in securities also 1% of that. Then Then sale of land, sale of building where entire consideration is received after completion. Sale of land or sale of building where the entire consideration is received after completion. Then supply of service by way of accepting nothing but interest or discount with respect to banks, NBFCs and financial institutions. Sir, once again, sir, RCM outward supplies. Second one, transaction in securities into 1%. Third one is like sale of land or sale of building where entire consideration received after completion. Fourth one, interest and discount to bank, NBFCs, financial institutions. 4. And we need to exclude what? Same interest and discount if it is to other than banks, NBFCs and financial institutions. Sorry, interest and discount to banks and NBFCs na include. Other than to banks and NBFCs na don't include. Okay. Then transactions covered in negative list. Then if any central excise, state excise, VAT, CST, all those also has to be excluded. Transactions covered in negative list, and then central excise, state excise, VAT, CST has to be excluded. Okay, so these things. Now, sir, we are discussing about Rule 42, manner of apportionment of ITC when the input service used for making taxable supply, exempted supply, and for other than business purpose. Sir, we'll understand this one. Manner of apportionment of ITC. Sir, here what does this rule is about means? There is a person who supplies exempted supplies, taxable supplies, and even non-business related supplies also. And he has common inputs. Then he can avail ITC only with respect to taxable supplies. Related to exempted, related to non-business, he cannot avail ITC. But he has those inputs or those services which he is availing are like common. Then we need to understand how he has to reverse the ITC. See, look at this example, sir. BCCA, it has 11th and 12th, which is like exempted supply. 11th and 12th education is like exempted. Then it provides ICMAI coaching, which is like what? Taxable. Then let's say, sir, there's like, for example purpose only. It's okay. So if it runs any educational camps in rural areas and all, then that it comes under what? Non-business. So 3 things are there. What are those? First one, 11th and 12th education, which is exempted. Then the ICMAI coaching and all, taxable. Then education camps in rural areas, which is non-business. Now the turnover, if you see, from exempted it is 20 lakhs, from taxable it is 50 lakhs, and from non-business nothing is there. Okay. Now, sir, books or tabs are being provided for this classes and all. Okay, for this education. Exclusively related to 11th and 12th, 5 lakhs worth books. On them the ITC is how much? 60,000. Related to ICMAI coaching, 20 lakhs. On that the ITC is like how much? 2 lakh 40. Then this non-business related educational camps and all, 2 lakhs at a rate of 12%, it is how much? 24,000. Sir, understood na? So these books and all are what? Specifically related to each and everything. Like they are not common thing. For intermediate separate books, for ICMAI coaching separate books, and for this non-business related also separate thing. Okay, then assume, sir, this one. Assume the faculty, the set of faculty is like same for all the 3. Okay, so the set of faculty, assume like it is the same. Okay, so the faculty cost is how much? 25 lakhs, sir, and that also not as like salary. The faculty is being paid on hourly basis, and then the faculty can be allocated to any of this. Okay, someday will be allocated for 11th, 12th, or someday for this coaching classes, and someday for this education camp. So it is like what? Common cost, and it couldn't be divided out of this 25 lakhs. How much is to 11th, 12th, how much is to ICMAI, and how much is to non-business related. Then this faculty cost we can call it as what? Common input. Sir, these are like specific inputs, but this is what? Common input. Then there is a building also constructed in the same year, 50 lakhs. Sir, building related ITC we can avail or no? We cannot avail. Immobile property related, sir, blocked credit we cannot avail. So that is how much? 6 lakhs. So total these are the inward supplies available for a particular month. Turnover 20 lakhs, turnover 50 lakhs. Now our aim is to what? To calculate the eligible ITC, or else we need to reverse the ITC which is related to non-business or exempted. That part we need to calculate. Okay, for this Rule 42 has given a format. Okay, so as per format, first what we need to take is like from this total example, you need to take the total ITC available. Sir, calculate and tell what is the total ITC available here. Total ITC available here. Quickly, sir. What is the total ITC available here? $60, 2 lakh 40, 3 lakh, 3 lakh 24, plus 4 lakh 50, plus 6 lakhs. 7 lakh. So you got the same, right, everybody? Sir, you forgot about ineligible, eligible, all those things. First calculate on the inwards what is the tax component is there. I mean, that could be taken as ITC. 60, 2 lakh 40, 24, 4 lakh 50, 6 lakhs. All this if you add. How much, sir? How much? 13,74,000. So the total ITC available is how much? 13,74,000. Okay. From this, first we'll subtract ITC which is exclusively related to non-business. How much is exclusively related to non-business? Exclusively non-business related, sir. 24,000. We're going to subtract this. We call it as T1. So, okay. First total ITC is how much? 13,74,000. From there, we'll subtract ITC which is exclusively related to non-business. How much, sir? 24,000. We call it as what? T1. Then, we're going to subtract T2 which is exclusively related to exempted supplies. How much is exclusively related to exempted here? 60,000. That also we're going to subtract. Then, T3 is like blocked credits or ineligible credits. Is there any blocked or ineligible credits, sir? Yes. How much, sir? 6 lakhs. So subtract that also. How much we got? So we subtracted T1, sir. T1 is what? Exclusively non-business. T2 exclusively exempted. T3 blocked or ineligible credits. Then we get how much? 6,90,000, which we call it as C1. Okay, that 6,90,000 we're gonna take it as ITC. But understand, sir, that 6,90,000 means what? Nothing but this 4,50,000, 2,40,000 we have taken. The rest all anyhow we have been subtracted. Okay. But what we know already, out of this 4,50,000, total ITC is not available because a part is related to exempted and a part is related to non-business. We know that. But still you will avail ITC how much? 6,90,000. So first you gonna avail 6,90,000 and we all know that a part of it is still ineligible but we still avail. Okay. From there now we'll subtract T4. What is T4? Out of this which is how much is exclusively related to taxable? Exclusively related to taxable. 2,40,000. That also if you subtract. Then what is the common credit, sir? 4,50,000. Okay, sir, here simple example now we can tell straight away also common credit as 4,50,000. But if there are many transactions and all, then that's not easy to simply identify and all. That's why we follow the format. What is the format? Total ITC, we call it as what? T. From there we need to subtract T1. T1 is related to what? Non-business related. T2 exclusively exempted related. T3 ineligible or blocked credits. Then we'll get C1. C1 is the ITC which we gonna take it to the electronic credit ledger. From there we gonna subtract T4. T4 is what? The credit exclusively related to taxable supplies. Then we'll get C2. That C2 is called the common credit. Common credit is how much? 4,50,000. Now what we know? Out of this 4,50,000, a part is ineligible. What related? Non-business related and then exempted related. So first, how much is related to exempted? So take this 4,50,000 into, sir, here what is exempted turnover and what is total turnover? Turnover. What is exempted turnover and what is total turnover? 20 lakhs is the exempted turnover, whereas total turnover is how much? 70 lakhs. So with respect to the turnover ratio, you need to find out the ineligible credit. So 4,50,000 into 20 lakhs divided by 70 lakhs. How much, sir? 1,28,571. So this part of credit is related to exempted which is ineligible. Sir, if you remember here 6,90,000 we already availed. In this 6,90,000 this also we already what? Availed. Now what we need to do? We need to reverse it. Reverse now again we need to add it to the liability. Okay, so D1 means what? Ineligible credit related to exempted supply. How do we calculate? C2 into exempted turnover divided by total turnover. Then ineligible credit related to non-business. How do we do that? D2 equals to C2 into 5%. What is C2? 4,50,000. 4,50,000 into 5% na 22,500. So this part of the credit is ineligible. We already availed, but it is what? Ineligible. So we need to add it again to the liability. Got it, na, sir? Sir, this kind of calculation we need to do every month. Every month it has to be done. Okay. Then once the year is completed, what does this is? They are asking us to calculate two. One thing is like aggregate of D1s and D2s, which was calculated month on month. Okay, April month D1, D2, May month D1 and D2, June month. So every month you calculated ineligible credit, right? So that monthly ineligible credit and all, take the total for an year. And then second one is what? Take the yearly turnover, take the yearly exempted turnover, and take the year-wise ITC available and all. I mean the same computation you do year-wise also once again. Okay, that is, sir, one thing is like you will take all the year-wise numbers and calculate. Second thing is what? Whatever we did in the monthly calculations, that add for the total year. So both compare. Okay, sir, here A is what? The monthly calculations related total. B is what? Again we recomputed by taking like yearly figures and all. Okay, now if the yearly one is only greater than the monthly's total, year-wise calculated is greater than the total month-wise total, then the difference amount we need to pay by when? 30th September, by 30th September of succeeding financial year along with interest. Sir, if monthly what we paid is only greater than that of the total again which we computed based on yearly data. So okay, then what difference amount can be refunded? But this will be done at the time of filing actually annual return. This is not relevant for us for the exam, sir. For exam, mostly they are asking till here only, D1 and D2 calculation. Okay, so let me solve questions. Sir, look at question number 18. Question number 18, sir. Here what happens, sir? See, question number 18, page number 8.16. Lips Limited manufactures 4 types of nail polishes, namely Sweetie, Pretty, Beauty, Tweety. Okay, 4 nail polishes they are manufacturing. The company has ITC of what? 3 lakhs on the common inputs. Sir, we need not to calculate the common credit, sir. They only given how much? 3 lakhs. So this 3 lakhs is called what? Common credit. That means what? Straight away they given C2. Used in the manufacture of nail polishes. Common inputs also used partly for what? Non-business purpose also. So they are used for non-business purpose. Sir, we are not sure whether it is used for exempted or not. As of now, we know it is used for taxable and non-business. During the year, the company manufactured 1,000 liters of each type of nail polishes. The company was not in a position to maintain separate set of records with regards to inputs used for final products. So GST payable is like what rate, sir? 12%. You are required to calculate the net GST payable. Sir, they didn't ask only ineligible credit. They asked what? Total GST payable. Okay. Sir, Sweetie sold to DTA. DTA na normal India, sir, other than SEZ area. So okay. So this is what? Taxable. The next one, sir, sale to SEZ. Sale to SEZ na zero rated supply. This also has to be treated as what? Taxable only. Then sale to A Limited of USA. Export. This is also called as what? Zero rated supply. That also taxable. Sir, exports and supplies to SEZ areas are called as zero rated supplies. Even though they are zero rated, just because the rate we refer it as zero rated, it doesn't mean they are exempted. There won't be any tax, but still they will be considered as what? Taxable supplies only. Zero rated supplies are always to be treated as like what? Taxable supplies only. So first 3 are what? Taxable only. Fourth one, they only said like what? Exempted from GST. Okay, exempted. That means what? They are using the same inputs for making taxable supply, exempted supply. In the question they said like they are used even for non-business purpose also. So all the three are there. Okay. We got what? C2 also there. C2 is how much, sir? 3 lakhs. We got C2 or not? 3 lakhs. Sir, we have taxable, exempted, non-business. We have C2 also. Sir, from C2 what we have to calculate? Ineligible related to exempted, ineligible related to non-business. Okay, what is the formula? Ineligible for exempted related. C2 into exempted turnover divided by total turnover. So now tell what is the turnover? Tell what is the turnover? Sir, first, how many bottles were sold here? Sweetie. 1000 liters means like how many bottles sold? Each bottle is like how much? 20. Okay. 50,000 bottles are sold, sir, not 50. Okay, so what? Why, sir? 1000 liters. Here one bottle is like what? 20 milliliters. Sir, 1 liter will have how many milliliters? 1000. So 1000 into 1000 divided by 20. How many? 50,000. So each like 50,000 bottles. So 50,000 bottles into 30 rupees. 50,000 into 30 na? 15 lakhs. This one 50,000 into 40 na? 20 lakhs. 50,000 into 50 na? 25 lakhs. Okay, 50,000 into 60 na? 30 lakhs. So what is the total turnover, sir? 90 lakhs is the total turnover. Out of the exempted turnover is how much? 30 lakhs. So what we have to do? C2. We already know. Common rate. How much, sir? 3 lakhs. So 3 lakhs into 30 by 90. How much, sir? 1 lakh. 1 lakh is what? D1. D1 is nothing but ineligible credit related to exempted supplies. Then D2. D2 how, sir? Non-business related. C2 into 5%. How much is C2? 3 lakhs into 5%. How much, sir? 15,000. Sir, what we have to do? This ineligible part. This ineligible we need to add to the liability. Okay. So the total ITC they will claim is how much? 3 lakhs. But ineligible part is like what? 1,15,000 which will be added to their liability. Okay. And then they have sales also. On sales we need to calculate what? Tax. But understand, sir, Pretty is what? Zero rated supply. You will not pay any tax. Beauty is what? Zero rated supply. You will not pay any tax. Then Tweety, exempted. There also no tax. So only you will pay tax only on what? Sweetie. How much? 15 lakhs into 12%. How much? 1,80,000. So the total tax liability is how much, sir? 1,80,000. And this amount to be reversed how much? 1 lakh and then 15,000. So total how much, sir? 2,95,000 is the liability. But the credit they are having is already how much? 3 lakhs. So if you adjust that, they need not to pay any tax. 5,000 still surplus credit is only there. See, 5,000 still surplus credit is only there. Okay, sir, question number 19 is also of similar thing, sir. Okay, you can practice it on your own. Question number 19, there is nothing great there. Okay, but question number 20, sir. Sir, here look at the question. Ram and Co. being a registered person under GST supplied the following for in the month of January. Taxable supply of goods, exempted goods, sale of land, recovery agent services supplied to bank, deposit on which interest is received. Okay, deposit on which interest is received. The common inputs already given, sir. How much is the common inputs? 2 lakhs. So C2 they only given directly. What we need to do, sir, then? D1 and D2. So to calculate D1, what we need? Exempted turnover and total turnover. So here how much is the exempted turnover? Sir, here for exempted turnover we need to include that, we need to calculate that exempted turnover definition is there. Inclusions and exclusions. The need of that definition is there here. So we need to calculate exempted turnover by applying that. 4 points are included, sir, there. What are those 4? First one. Okay. straight away what is exempted, that anyhow will be there. Other than RCM outwards. Here is there any RCM outward? Yes. Recovery agent services are covered under RCM. So this 2,50,000 we need to add. Next one, sir. Transaction in securities into 1%. Not there. So leave. Then sale of land or sale of building. Yes, land is there. So what? We need to add. Then fourth one, sir. Interest or discount received by whom? NBFCs, financial institutions only. Here who is assessee? Raman Co is okay. B is he's just a sole proprietor. For sole proprietor will not add interest and discount. To whom will add? Bank, NBFC and all. Sir, if you see interest point, that would be there in the inclusion side and even on the exclusion side. Only to bank, NBFC, financial institutions only will include. Others now we will not include. Okay. So what is the exempted turnover, sir? Here 5 lakh, 12 lakh 50 plus 2 lakh 50. Total how much, sir? 20 lakhs is the exempted turnover, whereas total turnover is how much? 42 lakhs. So 2 lakhs into 20 lakhs divided by 42 lakhs. How much? 95,238. Sir, here the problem is, in this question they didn't mention about non-business. If non-business is not there, then we'll not calculate D2. Only if there is mentioned about non-business, then we'll calculate D2 also. Here no mention about non-business related, so we will not calculate D2. Sir, everybody are able to understand? Okay. So what is the liability, sir, now? So there is only one taxable supply, 20 lakhs. 20 lakhs into 28% now how much? 5 lakh 60,000. From the and plus this 95,238 IDC to be reversed. So total liability is how much? 6 lakh 55,238. From there you adjust the ITC 2 lakhs. The total liability is how much? 4 lakh 55,238. So this was already asked in exam once. It's okay. Sir, you look at question number 19 also. We'll solve this one also. It's okay. Y Limited manufactured taxable and exempted goods. Y Limited also provides simultaneously taxable as well exempted services also. Okay, it does both taxable and exempted. Raw material 10,000 units was purchased at 100 per unit, used commonly, okay, to produce all final products. GST paid on inputs is how much? 12%. Sir, what is the total GST paid there? 10,000 into 100 into 12%. What is the input tax available? 1 lakh? 1,20,000. Whereas the input service also commonly used. Input service also commonly used. Whereas the total ITC is how much, sir? 1,74,000. Sir, total ITC is 1,74,000. Out of them, inputs related is how much? 1,20,000. So service related is how much? 54,000.
Sir, able to understand, sir, here total ITC they given how much? 1,74,000. And we discussed just now like what? Inputs related 1,20,000. So that means service related how much?
54,000. Okay, fine. Then they given turnover. What is the turnover here, sir? Like taxable supply of goods, exempted supply of goods, taxable supply of services, exempted supply of services. What else they given? You are required to compute the amount of reversal of ITC as per rule 42 of the month of January. Then they given a hint. Each unit of exempted product needs 2 units of raw material. Sir, what they said? Each unit of exempted product needs 2 units of raw material. Sir, how many goods has been supplied, sir, exempted? Sale value 1 lakh. But each unit is how much? 80. That means how many units sold, sir? Sir, what is the sale value here? 1 lakh. And they sold each unit for how much? 80. So that means how many units sold? 1,250. What is the hint said here? For every sold good, they need how many units of raw material? 2 units of raw material. Into 2 now how much? 2,500 units of raw material is needed for exempted. Now we got a hint, sir. What is that hint? Out of total 10,000 units of inputs, 2,500 are exclusively related to what? Exempted. That means 7,500 are exclusively related to what? Taxable. Okay, so we'll bifurcate that one. So 1,20,000. Okay, so 2,500 related, sir. That means what? 2,500 into 100 into 12%. How much? 30,000 is related to what? Exempted. Whereas 7,500 into 100 into 12 percentage, how much? 90,000. So 30,000 is related to exempted, 90,000 is exclusively related to taxable. Now we'll take the format. First, what we need to take, sir? Total ITC available. We call it as what? T. What is the total ITC available? 1,74,000. Okay, total ITC available. T is like how much? 1,74,000. Then first we need to subtract T1. T1 means what? Non-business related. Nothing is there. Okay. Then T2, exclusively related to exempted. Just now we calculated how much? 30,000. Subtract that 30. Then T3, any blocked or ineligible credit, nothing is there. Okay. So then we'll get how much, sir? C1, 1,44,000. I mean, how much ITC we gonna avail? 1,44,000. But then from C1, what we gonna subtract? T4. T4 means what? Which is exclusively related to taxable supplies. How much are? 90,000. Then if you subtract that, then 54,000 is the common credit. Okay. Now we need to calculate what? D1. I mean ineligible related to exempted supply. How much, sir, that one? 54,000 into, sir, here you can calculate exempted turnover, sir. What is exempted turnover? This 1 lakh and this 50,000. Total how much, sir? 1,50,000. So then 54,000 into 1.5 divided by 4.5 lakhs. Now it is how much? 18,000. 18,000 is the ineligible credit. It's okay. So now we are moving on to capital goods related. So then we are moving on to rule 43. Sir, rule 43 is about what? Sir, what we discussed is like when inputs are used for common purpose. Now what we are discussing is like, what we gonna discuss is like when capital goods are used for common purpose, not inputs. What used? Capital goods are used for common purpose. See, methodology for apportionment of credit of capital goods and reversal thereof. Sir, under this section first, by default, lawmaker presumes life of capital good as how much? 5 years. By default, the lawmaker presumes life of capital good as how much? 5 years. Okay, now capital goods we need to check like what? Used exclusively for, sir, when, so understand, sir, simple provision only. So during the month there is a capital good purchase. What we need to check? That capital good, is it exclusively for exempted or non-business purpose? We need to check. Okay. If it is exclusively for exempted or non-business purpose, then we cannot avail ITC. Leave it. If it is exclusively for a taxable purpose, then we can avail ITC. Avail that. Third one, sir. If it is used for common purpose, I mean for both exempted, non-business and even taxable purpose also, then also you avail full ITC. Sir, but second and third there is a difference. Second one is what? Which is used exclusively for taxable purpose. Whereas third one is what? Which is used for common purpose. In both the cases what we are saying like avail ITC, but to just to have a differentiation, if it is used for common purpose, mark it as A. Mark it as A. That's what. Separately you will take it as like what? A. Mark it as A. Just for identification. Understand, sir? During the month you purchased a new capital good. What you need to check? Exclusively for exempted or non-business purpose. Can you avail ITC? Ignore. Exclusively used for a taxable purpose. We can avail ITC. So take it for ITC calculation. Third one, used for common purpose. Again avail ITC and even mark it as what? A. So first step done. So see, capital goods solely taxable purpose. What we will do? Take credit to electronic rate ledger ITC. Need not to mark it as A. Capital goods exclusively exempted or used for non-business purpose. Then what? Will not even avail ITC, will not even mark it as A. Capital goods used for common purpose. Then what we'll do? We'll avail ITC and even will mark it as A. Now, capital goods used for exempted non-business and then change it to common purpose. Sir, what is this? Sir, this was not a capital good purchased now. It was purchased 2 years back or 3 years back. The capital good has been purchased, and that time it is used exclusively for exempted or non-business purpose. Sir, at the time of purchase, if it is exclusively for non-business or exempted purpose, will you avail ITC? So you didn't avail ITC back then. But now what happened? It was shifted to common use. From exclusively exempted to, now it shifted to what? Common use. Once it is shifted now, you can avail ITC now. Okay, you can avail ITC now. But it is for exclusive taxable or else like common purpose. Common purpose. So you avail ITC and even mark it as what? A. Sir, you understood the point, sir? What is this? This is not a current month purchase. But current month what happened? Even though it was purchased 1 year, 2 years back or any time. It's okay, not current period, sir. Somewhere in the past it was purchased. Now in the current month, it was shifted from exclusively exempted or non-business purpose to common purpose. So now we can avail ITC and even we should mark it as what? A. Okay. But, sir, in the provision beginning I said the capital good useful life has to be assumed as what? 5 years. Out of that already a part is used exclusively for what? Exempted purpose only, right? That actually we should not avail as ITC. But what I did in the previous step, we took full ITC and even we marked it as A. So now what simultaneously we have to do now? For the period which is already expired, calculate the ITC proportionate to the period which is already expired, and that part you have to reverse. So okay, nothing but you need to add it to the liability. See, simultaneously calculate the ITC to be reversed. How much? ITC into number of quarters used divided by 20. Sir, you might have a question, sir, why only 20? Why 20 na? For 5 years, how many quarters are there? 20. That's why. So ITC into number of quarters divided by 20. Okay, so what we are doing, sir, here? It was shifted from exempted purpose to common purpose. Now you can avail full ITC, mark it as A also. But for the period, for the quarters which was already expired, what you have to do? ITC into number of quarters used divided by 20. That part you need to again add it to the liability. Okay, this is also done. Then third one, capital good. Again, purchased long back only. That time it was used exclusively for taxable purpose. Now converted into common purpose. Sir, understand my point once again. Purchased when? In the past. And when purchased it is used exclusively for what? Taxable purpose. Then ITC availed that time or not? Yes, availed. Now shifted to what? Common purpose. Sir, since already ITC availed, now again nothing to be there to avail. Okay? But just to mark it as A. Why need to mark it as A, sir? Because it is being used for common purpose now. So you cannot avail ITC, but you will mark it as what? A. It's okay? Then you will get what? Total ITC available and even the aggregate of A. Now take this aggregate of A. The take aggregate of amounts which is marked as A. From there, sir, out of all the assets related ITC which was marked as A, if any asset 5 years is already lapsed, then that related assets value subtract. So you take only the net of A's whose useful life of 5 years is not expired. So take that net of A, some amount will come. Then what? We need to convert into monthly amount. So the total of A, we need what? Month-wise amounts. So that's why to want month-wise, we will be dividing by 60. Sir, why to divide it by 60? Sir, 5 years means how many months? 12 months. 1 year, 12 months. 5 years means 60 months. That's why we are dividing the aggregate of A by 60. Then we are getting the monthly common credit related to capital goods, which we call it as TM. Sir, we need to take aggregate of A. From there, if any asset useful life of 5 years is expired, subtract those related amount. Then the total divided by 60, then you will get the monthly common credit. So monthly common credit, what we have to do? Same like D2, sir. What D1, what we did? C2 into exempted turnover divided by taxable turnover. Here also same. Take this TM into exempted turnover divided by total turnover. Here non-business related will not reverse anything. Only related to exempted purpose only we gonna reverse. Okay. So that is the provision here, rule 43. So come to the question, sir. There will be a question. Question number 23, sir. Question number 23.
See question number 23, sir. Praja Industries is a manufacturing company registered under GST. It manufactures two taxable products called X and Y. One exempt product, Z. The turnover of X, Y and Z in the month of April was 2 lakhs, 10 lakhs and then 12 lakhs. Praja Industries is in possession of certain machines and purchase more of them also. Useful life of all the machines is like how much, sir? 5 years only. Sir, here how many machines they are having? Sorry, how many products they are dealing? X, Y, Z. X, Y are what? Taxable. Z is what? Exempted. Sir, what is the exempted turnover? 12 lakhs. What is the taxable turnover? Total turnover 24 lakhs. Okay, this is clear, right? Now, from the following, we need to calculate the ITC available. Here, machine A purchased on 1st April for being exclusively used for non-business purpose. Sir, can we avail ITC? Non-business purpose, exclusively for non-business, sir. We can't avail ITC, will not even mark it as A, so ignore. Next one, machine B purchased for being exclusively used in manufacturing zero rated supplies. Means what? Sir, zero rated means taxable or exempted? Taxable only. So we can avail ITC, but need not to mark it as A. Why? Because it is exclusively for taxable. Understood now, sir? So see here what we did. For machine A, what we did? ITC not availed. But for machine B, ITC availed, but we didn't mark it as A. Then machine C purchased on 1st April for being used in manufacturing all the three products. That means what? Common use. So common use means what we have to do? We have to avail ITC and we should even mark it as A. So take like 96,000 under ITC column and even under the A related column. Then machine D. Sir, machine D what happened? It was purchased on 1st April 2 years before. Not current month purchase. 2 years before. And then why it is purchased? For being exclusively used in manufacturing product Z. Sir, Z exempted or taxable? Exempted. So it was purchased for using exclusively for exempted. But now what happened? Such machine will also be used for X and Y. That means what? Shifted from exempted to common. Exempted to common. So two steps are there, sir, here. Two sub steps will be there. First thing what we will do? We will avail full ITC and even mark it as A. How much? 1,92,000 will avail and even will mark it as A. Then another thing what we have to do, sir? For the number of quarters which is already expired, we need to reverse the liability also. Sir, 2 years means how many quarters expired? How many? 8 quarters already expired. So how much, sir? 1,92,000 into 8 divided by 20 if you do. How much? This 76,800 what we have to do? We need to add it to the liability. Okay. So see here what we did. Machine D related we availed 1,92,000 and even marked as A also. And the reversal also, sir. Okay, 8 quarters into 5%, that is how much? 76,800. Okay, done. Then the last one. Machine E purchased on 1st April 3 years before. That time it is used for manufacturing product X and Y. But now it will be used even for product Z. What happens, sir? Taxable to common. Sir, since it is taxable, first itself ITC availed. Now nothing to avail. But we need to mark it as what? A. So we got what? Total ITC available 3,26,440. And the aggregate of A is how much? 5,76,000. Sir, here there is no asset to which useful life of 5 years is expired. So we'll take the same 5,76,000 divided by 60. We'll get monthly credit of how much? 9,600. So that 9,600 is the common credit. So common credit into what? Exempted turnover divided by total turnover. So 9,600 into 12 lakhs divided by 24 lakhs, which is how much? 4,800. So ineligible credit here 4,800 and this 76,800 we need to add to the liability. Okay, that only they also did 4,800 here. So okay, that is related to capital goods, sir. Now this 17.4 we have completed already, 18 subsection 6 we have completed already. Now this one, sir, 18 subsection 1. Sir, what is this? Availment of ITC, availment of credit when shifting from non-tax paying status to tax paying status. I mean, till date you are unregistered. Now you are being registered. Sir, when you are unregistered, can you avail ITC? But once you become registered, you can avail ITC. Okay. Till date, you are supplying exempted supplies. You are making exempted supplies. But from today, your supplies became taxable. Sir, exempted supplies now you cannot avail ITC. But once they become taxable, you can avail ITC. Or else, you are till day you are under the composition scheme. Then you cannot avail ITC. Once you opt out from composition scheme, then you can again avail ITC. So here what happened? See, SC, I mean the person who is doing business applied for registration within 30 days from date of liability to register. I mean his turnover exceeded the threshold, so he applied for registration within 30 days from date of liability. Okay, then what? Sir, let's say his turnover exceeded on 1st November. His turnover exceeded on 1st November. That's what? Date of liability is how much? 1st November. That means from 1st November he should register. So before 1st November, what is the preceding date to 1st November? 31st October. Sir, if a business person, every day he'll have what? Some closing stock, right? Same way, on 31st October, he might have some closing stock. It might be raw material, it might be work in progress, or it might be finished goods. Okay, those were purchased when he is unregistered, he has purchased. But from 1st November, he became what? Taxable person. His supplies becomes taxable, but he didn't avail ITC. Sir, understand my point, sir. From 1st November, his turnover exceeded threshold. On 31st October, he has some closing stock. On that closing stock, he didn't avail ITC. Why? Because till day he is unregistered person. But from 1st November, he has the liability to register. His supplies are taxable. He need to pay tax. He didn't avail ITC, but he has to pay tax. Then what? There is double taxation. That's why what they are saying, like, this person, once he shifts from unregistered to registered, on the day,
and on the preceding day to date of liability, on the preceding day to date of liability, whatever is the closing stock, that closing stock related, he can avail ITC, that closing stock related. It may be in raw material stage,
work in progress stage, or finished goods stage. Those related, he can avail ITC. But there are two conditions. First one, invoice must be there for those raw material, work in progress, or finished goods. Second one, that invoice shouldn't be older than 1 year. See, ITC on inputs, raw material, work in progress, finished goods as on the day preceding to date of liability. Invoice must be there and it shouldn't be older than 1 year. Okay. Then capital goods. Sir, at the time when he is unregistered, he might have purchased some capital goods also. But on capital goods, he cannot avail ITC once he becomes registered also. Only on inputs it is available. Understand, sir? Next one. Voluntary registration. Sir, his turnover didn't exceed it. He only voluntarily registering under GST. But still what happens? Till date, he was unregistered. So on his stock and all, he didn't avail ITC. But from today onwards, his supplies are what? Taxable. Even though it's voluntary registration. So what they are asking? When his registration is granted, check that date. Registration granted date you need to check. On that day, for the day preceding day. Registration, let's say, granted on 15th December. What is the preceding day, sir? 14th December. On 14th December, you need to check the closing stock. Raw material, work in progress, finished goods. With respect to them, he can avail ITC. Two conditions. Invoice must be there. Invoice shouldn't be older than 1 year. Sir, look at these dates. ITC on inputs with respect to, like, he applied because of liability, sir. I mean, there is a liability to register. On which day closing stock, sir? As on the day preceding to date of liability. Voluntary registration as on the day preceding to date of registration. Nothing but the day he got certificate. Then he switched from composition to regular. Sir, when he shifts from composition to regular also same. ITC on the closing stock he can avail ITC. Sir, from today he shifted from 1st December he shifted to regular scheme from composition scheme. Then on 30th November, how much ever is the closing stock is there, that related ITC can avail. Two conditions. Invoice must be there and not older than 1 year. But surprisingly here, when he switches from composition to regular, even on capital goods also they can avail ITC. Unregistered to registered only on inputs ITC can be availed. But when he is shifting from composition to regular, both on inputs, and even on capital goods also ITC available. How much on capital goods? What is the total, the ITC on capital good? From there, subtract 5% for every quarter or part of the quarter which is already used. Subtract 5% for quarter or part of the quarter from date of invoice till day. Whichever is the period which is already completed, 5% for every quarter has to be subtracted. The balance amount can be availed as ITC. Sir, 1 year back you purchased capital good. 1 year back now how many quarters expired? 4 quarters. So from the total ITC you subtract 4 into 5%. 20% you will subtract. Balance amount you can avail as ITC. Then the last one. Till date he is a registered person only. But till date his supplies are exempted. From now they became what? Taxable. Let's say from 15th January they became taxable. 15th January the supplies are what? Taxable. Then on 14th January whatever is the closing stock, that relevant ITC can avail. Invoice must be there and invoice shouldn't be older than 1 year. Not only inputs sir, even capital goods related also you can avail ITC. How much? Total ITC minus number of quarters already used into 5%. If he subtract, he can avail it as ITC. So what is this sir? Switching from non-tax paying status to tax paying status. Okay. So now what? Registered person has to make an electronic declaration specifying the details related to stock, and declaration has to be filed within 30 days from the date he becomes eligible to avail ITC. When the total claim of ITC, sorry, he is availing ITC, right? When the total ITC is availing because of this switchover is more than 2 lakhs, then he need to get it certified by a practicing CA or CMA. Then we'll discuss 18 subsection 4 also, and we'll discuss the problems. Then we'll complete this part. Reversal of credit from shifting tax paying status to non-tax paying status. Reversal of credit when shifting from what sir? Tax paying status to non-tax paying status. See. Sir, what happened? First what we discussed. Till now he is unregistered or making exempted or composition. That means what? He is not paying tax. But now he became what? Taxable. So in that case what? He can avail ITC. Now this 18 subsection 4 is reverse to what? Reverse to that. Till day he is under regular scheme. But from tomorrow onwards he will become to composition scheme. Till day his supplies are taxable. But from tomorrow onwards they are exempted. Till date he is under registered person. But tomorrow is cancelling his registration. Then what is happening sir? Registered, tax paying status to non-tax paying status. Now on the closing stock he cannot avail ITC. He has to reverse the ITC. Sir, understanding sir my point? When you are shifting from non-tax paying to tax paying, you are availing ITC. When you are reversing, sir, understand the logic. You are already paying taxes. So you are a normal regular registered person. What you will do? You will avail ITC on your stock and all. You have some closing stock today. But from tomorrow onwards your registration is being cancelled. That means you are no longer liable to pay tax. But you already availed ITC relevant to your closing stock also, right? So that part of ITC, what you have to do? You need to reverse. See, when the registration is cancelled or when a person is converting from regular scheme to composition or taxable to exempted. Registration cancelled, regular to composition, taxable to exempted. Then ITC on the inputs on the day preceding to switch over. Sir, let's say tomorrow you are switching over, then today's closing stock is relevant. So the preceding day to switch over. Okay, on that day whatever are the inputs are there, like raw material, finished good, work in progress, those relevant credit has to be what? Reverse. Reverse now nothing but what? We need to add them to the liability. Okay, sir, how much to be reversed? For them, if invoice is there, for those particular closing stock, if invoice is there, as per invoices, how much ever is the tax, that tax has to be reversed. Sir, invoice not available, sir, then what to do? Invoice not available also you need to reverse. Sir, then how to reverse? Find out the market value of those goods and apply the applicable tax rate, then you will get the, see, invoice not available, open market value into tax rate has to be taken, that amount needs to be reversed. Understanding, sir? When you are shifting from tax paying to non-tax paying, the closing stock relevant ITC you need to reverse. If invoice is there, as per invoice how much tax is there, that has to be reversed. Invoice not there, open market value into applicable tax rate, that amount has to be reversed. Even for capital goods also reversal has to be made. reversal has to be made. How much? Take the ITC as per invoice. For capital good related, how much ever is the ITC as per invoice, take that. Then, sir, understand this clearly. You need to subtract month-wise, sir. Month-wise, not quarter-wise. Minus number of months used divided by 60 into ITC. Let's say already 10 months used. Then what you have to do? 10 by 60 into ITC. This part if you subtract, balance amount has to be reversed. Total ITC minus number of months used divided by 60 into ITC. So proportionate to the number of months already used has to be subtracted. Not proportionate to quarters. Proportionate to number of months used has to be subtracted and balance has to be reversed. Okay. Sir, after reversing this, if still he has any input tax credit balance, that balance will be lapsed only. No refund will be given. Okay. Now we will solve certain examples on this, sir. Okay. Question 24 only, sir. The goods manufactured by Royal Limited have been exempted from GST with effect from what? 15th November. Earlier these goods were liable to tax at what? 18%. Its inputs were liable to GST at what rate? 12%. From following information supplied on 15th November, okay, we need to calculate. See what? Inputs lying in stock, how much, sir? 1,44,720. Then inputs costing 77,184 are in work in progress. Finished goods valuing 4,82,400 are in stock. But out of those finished goods, only 50 input cost is only 50% of the value. That means how much, sir? 2,41,200 is only related to input. Okay. And then they also had what? Capital good on which GST paid at a rate of what? 28%. And they had a credit balance of how much? 2,79,104. Okay. So they are asking like what? How much is the credit to be reversed? How much is the credit to be reversed? Sir, what happened here? They have been exempted. I mean, so they shifted from tax paying to exempted. Nothing but tax paying status to non-tax paying status. They have to reverse what? ITC. So with respect to the closing stock, ITC has to be reversed. How much is the ITC, sir? 1,44,720 into 12%. Okay, 77,184 into 12%. 2,41,200 into 12%. See how much it is there. 17,366, 9,262, 28,944. This is the total amount to be reversed with respect to inputs. Then even related to capital goods also it has to be reversed. Sir, capital good how much, sir? 2 lakh at GST how much rate? 28%. So 2 lakh into 28% now how much? 56,000. Okay. From there we need to subtract like what? Month wise. ITC into number of months used divided by 60. We need to count how many months they already used. Sir, when it is purchased? 10th July. When it was sold? 15th November. Part month also has to be counted as a full month. So July, August, September, October, November. How many months used, sir? 5. So 56,000 into 5 by 60. How much? 6,000? 4,000? 667. If you subtract, you will get how much, sir? 51,333. So this 51,333 and this inputs related, this total amount we need to reverse. Since they are having ITC amount, we'll adjust that from the ITC amount. So after adjusting them, still they are having excess ITC. How much, sir? 1,72,199. Sir, will they get this as a refund? No, sir. Okay, after reversal, if any credit is there, that will be lapsed only. That will be lapsed only. They asked another question also, sir. Will your answer be different if they have credit of only 29,104? Yes. Sir, they need to pay this 3 total plus 51,333. But they have credit only to the extent of 29,104. So then you will adjust that 29,104 and balance you will be paying through cash. See, balance 77,801 paid in cash. Sir, look at question number 27, sir. A applies for voluntary registration on 22nd November and obtained registration on 25th November. A has stock on the following due dates. How much? 21st November. Opening balance how much? 12,000. Then purchased how much? 20,000. And sold 8,000. Sir, when he applied for voluntary registration? 22nd. And when the registration granted? 25th. So we need on which day closing stock? 24. Why? Because preceding day to date of registration. So 24th. But they given closing stock on which day, sir? 21st. And they said like what? 21st, what is the opening balance? 12,000, purchased 20. So total 32 minus sold 8. What is the closing stock on 21st, sir? 24, 24,000. Then what happened on 24th? Another 5,000 has been purchased. Another 5,000 purchased now how much, sir? 29. And sold how much? 15,000. Then what is the closing stock on 24th, sir? 14,000 is the input. Okay. So with respect to this 14,000 units, we can avail ITC. How much? 14,000 units later. Did this mention any tax rate, sir? Yes. A purchased goods uniform rate throughout the year at what? 100. So 14,000 into 100 into 18%. 2,52,000 we can avail regarding what? Inputs. Then capital good also there, sir. Sir, capital good related ITC can they avail? Capital good related ITC can they avail? No, sir. Capital good related is available only when they shift from composition to regular or taxable to exempted. Unregistered to registered case on capital goods ITC is not available. So on this capital good ITC is not available, only 2,52,000. So the ITC available is like within 2 lakhs or about 2 lakhs. Here within 2 lakhs or about 2 lakhs. About 2 lakhs. So what has to be done? A certificate from practicing CA or CMA has to be obtained. So okay, then 28 also we'll see, sir. Then this is the last question from ITC. Mr. C, a registered taxable person, was paying tax at composition scheme up to 30th July. However, with effect from 31st July, C becomes liable to pay tax under regular scheme. See what happens are here. Input as on 30th July is how much? 3,54,000 inclusive of GST. So what we have to do? 3,54,000 into 18 by 118. How much? 3,54,000 into 18 by 118. 18 by 118. I didn't ask the 100 by 118. 3 lakhs into 54,000 into 18 by 54,000. So this is what we can avail as ITC. Sir, what happened here? They are shifting from composition to regular. Okay, C registered person was paying tax at composition scheme up to 30 July. From 31st July, what? He is liable to pay tax at regular scheme. So composition to regular. When shifted from composition to regular, what can happen? ITC on inputs can be availed. And even ITC on capital goods also can be availed. So on inputs 54,000. Then capital good, how much, sir? 5 lakhs. But purchased when? 22nd April. Sir, 5 lakhs into 18% now, how much? 90,000. But we need to subtract number of quarters already used into 5%. How many quarters used, sir? April, May, June. Because 22nd April, April, May, June quarter used. And it was converted in July. That means July also has been used. Part quarter also, full quarter. So we need to subtract what? 2 quarters into 5%. Nothing but 10% if you subtract. 81,000. So with respect to capital good 81,000, with respect to input 54. So total ITC available is how much? 1,35,000. Got it, sir? Okay, so with this we have completed ITC. ఉంది 5 years తర్వాత అసలు ఒకవేళ 5 years దాటితే నీకు ఇక్కడ ఎలాగో 0 అయిపోద్ది కదా, బికాస్ యు ఆర్ సబ్ట్రాక్టింగ్ వాట్ నెంబర్ ఆఫ్ క్వార్టర్స్ యూస్డ్ ఇంటూ 5%. If it is beyond 5 years now, it will become 0, the credit to be availed.
Sir, we are under the charge chapter now. Sir, what is mentioned here? Exempted supply. What is meant by exempted supply? Exempted supply means supply of goods, services or both which are wholly exempted by way of notification, nil rated supplies and even non-taxable supplies. Nil rated supplies na, for which the tax rate itself is nil. Non-taxable supplies means alcoholic liquor for human consumption and HP-man. HP-man means high-speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas. Then special category states, sir. What are called special category states? Uttarakhand, Assam, Sikkim, Kashmir, Tripura, Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Himachal Pradesh. Then this one important, sir. Definition of interstate supply. Sir, what is called interstate supply? When location of supply and place of supply are in two different states or two different union territories or one state and one union territory. So LOS, POS, sir. We are not checking supplier and recipient. What is place of supply? Place of supply rules typically will help us in finding out the destination of that particular supply. Okay. Most of the cases destination will be recipient place only. That's why at inter-level and all we'll say like what? Where supplier and recipient are in two different states, we call it as interstate. But actual definition is not supplier and recipient. We need to check what? Location of supplier and place of supply are in two different states, two different union territories, then it is called as interstate. Then where there is an import of good and service, if it is like import of good and service, or where location of supplier is in India and place of supply is outside India. Okay, sir, once again, sir, LOS and POS are in two different states and two different union territories, or one state and one union territories. The next one, import of goods and services. Then third one, LOS is in India and POS is outside India. Then supplies to or by SEZ unit or developer. Then supply is in taxable territory and which is not an intrastate and not specified anywhere. So intrastate now there are 5 points. First one, common one, LOS, POS are in two different states. Second one, imports are always interstate. Third one, they are not referring exports, sir. Sir, this may look like export, but they didn't use the word export. Supplier where? India. Place of supply where? Outside India. Nothing but supplier India, destination outside India. Nothing but we call it as what? Export. But they didn't use the word export. But you can remember one thing. All exports are interstate only. All exports are interstate only. But just because these two conditions satisfied, it need not to be necessarily an export. Okay. So these two conditions may be satisfied and still it may not be an export. That's why location of supplier should be where? India. Place of supply? Outside India. Fourth one, supplies to SEZ unit or SEZ developer or supplies by SEZ unit or developer. And fifth one, residual category. It is within the taxable territory only, but not intra. Then that is called as what? Intrastate. Then intrastate supply, sir. Supply of goods and services where LOS and POS are in the same state or same union territory. Then there is a supplies to or by an SEZ unit or developer and goods imported into India till they cross. Okay. Sir, both LOS and POS are in same state. Then what? Intrastate. Sir, now SEZ also within the same state. Now, even though they are geographically within the same state, but you make any supplies to SEZ, it has to be treated as what? Intrastate only, not intra. Okay? And they even, if the supplies are made to a tourist, let's say a tourist came to Hyderabad. So in Hyderabad airport, he purchased few goods or few chocolates, something kind of, and he made purchases which are covered under section 15 of IGST Act, then that also, even though he is also in Hyderabad, the shop also in Hyderabad, but still it has to be counted as like what? Interstate only. Okay, then we are moving on to section 9. Section 9 is what? Charge. Okay, charge has 5 subsections: 9 subsection 1, 9 subsection 2, 3, 4, 5. What 9 subsection 1 says? A tax named CGST is levied. Sir, why CGST? Why not SGST? Because we are referring which act? CGST Act. If you refer SGST Act, there it will be mentioned as what? SGST Act. If you go to IGST Act, the corresponding section is section 5. There it will be mentioned as what? IGST. Okay, now coming back here. A tax named CGST is levied on intrastate supply of goods, services or both except alcoholic liquor for human consumption. So what tax? A tax named CGST is levied on what? Intrastate supply of goods, services or both except alcoholic liquor for human consumption. Okay, sir. On intrastate supply, tax will be levied. Okay. Let's say on this mouse, tax will be levied. On what basis? On the color of mouse, weight, specifications, then what's the base? Value. It's okay. If it is like 200 rupees, on 200 we are levying GST. If it is 500, on 500 we are levying GST. So like the point is the tax will be levied on value of supply determined under section 15. By using what rate? Inky pinky ponky will do and will take a random rate. No, right? So the rate which is notified by government, but maximum is how much? 20%. So a tax named CGST is levied on intrastate supply of goods, services or both except alcoholic liquor for human consumption, and such tax will be levied on value of supply using the rates notified by government. Maximum rate is how much? 20%. Then the currently applicable rates are like there is 1.5%, 2.5, 6, 9, 14, 20, and for composition scheme persons 0.5 and 3%. Then GST on petroleum products. GST on petroleum products. What are called petroleum products are high speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas. What is mentioned here? GST on petroleum products can be levied only from the date notified by government on recommendations of council. So on petroleum products currently no GST. It will be levied from when? From the date when council recommends. So 9 subsection 3 is about goods and services on which RCM applicable. Sir, 9.4 is what? Only on specified class of goods and services, not on everything. Specified class of goods and services when they are supplied by an unregistered supplier. Who is supplier? Unregistered. And if they are like a specified class of goods and services, then RCM applicable under 9.4. So 9.3 also about RCM, 9.4 also RCM. Okay. So we are going into RCM now. First goods. Goods on which RCM is applicable. BD leaves sold by agriculturist to registered person. What, sir? BD leaves. Second one, tobacco leaves. Again sold by agriculturist to registered person. Third one, silk yarn sold by agriculturist to registered person. So, okay, not directly agriculturist, but like what? Sir, we know like how silk will be produced. Like there are silkworm. So, the silkworm will grow and it will go into a deep sleep mode. Once it goes into sleep, it forms like a cocoon and then goes into the deep sleep mode. Once it goes into that sleep, we'll kill them. We'll put them into hot water, then the worm will die. Okay, the outer layer, the cocoon, only will collect it as what? Silk. It is nothing but the saliva of silkworm. It's okay. BD leaves, tobacco leaves, silk yarn, sold by whom? Agriculturist to registered person. Then cashew nut. Cashew nut which is not shelled or peeled. Sir, cashew nuts when we buy, we'll get the inside nut. But actually when it comes from the tree, Okay, it will have an outer layer also. So that cashew nut without breaking the outer shell, if they were sold by agriculturist to registered person, then they are covered under RCM. Then raw cotton. Raw cotton, the cotton which was extracted from the plant, sold by agriculturist to registered person. All these are covered under RCM. 5 points, sir, as of now. BD leaves, tobacco, silk yarn, cashew nuts, raw cotton, sold by agriculturist to registered person, covered under RCM. Then used, seized or confiscated goods and vehicles. Used, seized and then confiscated goods and vehicles sold by government to registered persons. Sir, certain used goods or seized goods will be not only goods and vehicles will be sold by government by calling for auction and all. Sir, government will be seizing so many goods and all because of non-payment of taxes. Vehicles also they'll seize. So usually we know that vehicle seizes and all. When proper documents and all are not there, they'll seize the vehicles and all. So used, seized, confiscated goods and vehicles sold by whom? Central government, state government, union territory, local authority to a registered person. Then they are covered under RCM. Then priority sector lending certificate. Priority sector lending certificates, na understand, sir? It's like, okay, I'll tell it very shortly, sir. RBI puts certain it puts compulsion on banks to give loans even to priority sectors. I mean, a specific percentage of their loans should be into priority sectors. What are priority sectors? Education loans and agri loans. But it's not possible to a bank which is mainly in urban areas to give agri loans and all. So they may not reach their priority sector targets and all. So then what they can do, they can buy the credit of giving a loan. Sir, they will not actually give loan. Loan will be given by, let's say, SBI gives so much of agriculture loans and all. Okay, they are much beyond their targets. So they had, sir, understand, once they give a agriculture loan, assume they'll get some credit points kind of. Okay, for every loan they create, okay, they'll get some credit points kind of. Now, one bank achieved the target and even beyond target also it has given so many things. So it has what? Surplus points. Sir, I'm not talking about loan. It has some points because of achieving the target general and for giving more than that is specified or more than the percentage of loans to be given. Now, whereas other bank cannot fulfill the target. So it is having what? Deficit of points. Then what? It can buy the credit points from the other bank. Okay, this bank. Okay, how the credit points will be transferred? They will be linked to a certificate and the certificate will be given. So it is once, so let's say I have a deficit of giving priority sector loans. Now what I can do, there is other bank which has surplus. Now from that bank I can get that credit points. Okay, how the credit points will be given to me? In the form of a certificate. Okay, so that certificate is called as nothing but what? Priority sector lending certificate. Simple like carbon credit. You know carbon credits and all. Okay, what is carbon credit, sir? Every factory will have a limit how much carbon they can emit. Once they exhaust that limit, they cannot produce actually. But will they stop manufacturing? Then how do they do? They'll buy carbon credit. So there are two factories. Let's say each have 10,000 credit only. Whereas one factory used only 2,000 credit. So it has how much? Surplus 8,000. Whereas the other company reached already 10,000. So it can buy now the other 8,000 carbon credits and can continue the manufacturing. Same way, this bank is having a shortfall of priority sector loan. So to fulfill that, what it can do, it can buy that equivalent of credit points from some other bank. That's called priority sector lending certificates when sold by one registered person to another registered person, covered under RCM. Lottery tickets sold by state government, union territory, local authority to a lottery agent or distributor, covered under RCM. Essential oils sold by unregistered person to registered person, covered under RCM. Metal scrap sold by unregistered person to registered person, covered under RCM. Okay, so the code is like BTS couple. B means BD leaves, T means tobacco leaves, S means silk yarn, CO means cashew nuts and cotton, U means used, seized, confiscated goods and vehicles, P means priority sector lending certificates, L means
lottery tickets. E means essential oils. And the last ones are metal scrap, which is supplied by unregistered person to a registered person covered under RCM. Okay. Now services under 9 subsection 3. Sir, understand this point, sir. Okay, you should be attentive here because we cannot, there will be around 20 points under RCM. Okay, there are like 20 services which are covered under RCM here. So we cannot repeat multiple times and all because it's not regular batch, sir. Your exams are just 20 days. It's okay, so I'll be discussing only once. So where a music composer or photographer transfers or permits the usage of copyright, he is giving the copyright, either selling the copyright or allowing the other person to use the copyright, then on this particular service RCM applicable. Sir, composer is the supplier, the recipient, whoever is taking that copyright, whoever is buying that copyright is the recipient. Who has to pay tax under RCM? That recipient only has to pay tax. Okay, with respect to what? Music composer and photographer, they are transferring their copyrights or allowing the other person to use their copyrights. First one. Second one, any person other than body corporate, any person other than body corporate renting a motor vehicle to body corporate. Sir, understand? Any person other than body corporate renting motor vehicle to body corporate which is designed for transportation of passengers. It's okay. Any person other than body corporate is renting motor vehicle which is designed for transportation of passengers to another, to a body corporate. What is called body corporate? A company, LLP or statutory corporations, these are called what? Body corporates. Who given the rent, sir? Other than body corporate. To whom? Body corporate. What has been given on rent? Passenger transport vehicle, and the contract amount should be inclusive of fuel cost. Let's say, sir, a car has been taken on rent monthly 1 lakh and that 1 lakh is including fuel cost, then it is covered under RCM. It's not the car owner who has to pay tax under RCM. The one who took it on rent has to pay the tax under RCM. Then author transfers or permits the usage of copyright for his work. Author wrote a book and then his work, his copyright, he is giving to the publisher. Either he is transferring or allowing to use his copyright. On this service also what? RCM. That means author will not pay. Who will pay? Publisher will pay tax under RCM. But here, if author is registered and files a declaration, author is registered and files a declaration, then he has the option to pay tax under FCM. Sir, usually what? RCM only. Okay, sir, the first two and all, there is no option to pay tax under FCM even with declarations also. But for author as an option, like what? If he is registered and if he files a declaration, then he can pay the tax under FCM. Once the option is exercised, it can't be withdrawn until the expiry of 1 year. Then arbitral tribunal. Sir, I said like yesterday also, arbitral tribunal means what? When two parties are having dispute, a business related dispute, instead of they fighting each other, they'll appoint an arbitrator on behalf of both. Then those two parties will sit and talk and make a compromise. Okay, and that compromise may be like by paying some compensation amount and all, they'll compromise the issue. So the one who talks on behalf of both those parties are called as what? Arbitral tribunals. They'll not do freely. They'll charge fees for compromising the issue also. So they are called as what? Arbitral tribunals. Okay, where an arbitral tribunal provides arbitration service, where an arbitral tribunal providing arbitration service to business entity, then they are also covered under RCM, provided the business entity turnover should be beyond registration limit. What are the registration limits, sir? See, depending on the states, Pondicherry, Telangana, Sikkim, Uttarakhand, Meghalaya, Arunachal Pradesh, PT Suma. These 6 states, PT, Suma, Pondicherry, Telangana. Then Sikkim, Uttarakhand, Meghalaya, Arunachal Pradesh. These 6 states, the turnover limit is 20 lakhs. I mean beyond 20 lakhs, there a person has to register. Irrespective of goods, services, or both goods and services, when the turnover is in excess of 20 lakhs, there a person has to register. Okay, PT, Suma. Then Mint, second category. Mizoram, Manipur, Nagaland, Tripura. What are the 4 states are here? Mizoram, Manipur, Nagaland, Tripura. These 4 states, there the threshold is 10 lakhs. Irrespective of good, service, or both, when the turnover exceeds 10 lakhs, then a person has to register. In the other states, what are other states, sir? Andhra Pradesh, Tamil Nadu, Karnataka, Maharashtra, Gujarat, all these are like other states. There, goods 40 lakhs, service 20 lakhs, both 20 lakhs. Okay, so to which states threshold limit is 20 lakhs irrespective of goods, service, or both? 6 states are there, sir. PD, Suma, Pondicherry, Telangana, Sikkim, Uttarakhand, Meghalaya, Arunachal Pradesh. There are 4 states for them the threshold is 10 lakhs. Mizoram, Manipur, Nagaland, Tripura. And there are like others for which goods 40 lakhs, service means 20 lakhs, both 20 lakhs. Then, so arbitral tribunal providing services to a business entity whose preceding turnover is less than the limits which I said previously, the registration limits, then that is exempted. If the turnover is like above or equal to that of registration limit, then what? RCM is applicable. Then director providing service to a company. Sir, what directors will do in company, sir? They are the ones actually who will take the decision making and all. Sir, in some cases, director may be employee also, and even can be acting as a director also. Employee, he may be managing something, and even he will be involved in the decision making also. For being a director service, he will not get, sir, director being an employee, he will get 2 remunerations. One is for acting as an employee, he will get salary. For acting as a director, whenever he participates in the meetings and all, he will get sitting fee and all. So salary covered under where? Negative list. That's why how to decide which is salary and which is director fees related. For that, the clarification they said is like, we need to check under which section the TDS has been deducted. Under which section the TDS has been deducted. If at all the TDS is deducted under section 192, it is salary. If at all the TDS is deducted under 194J, then it is what? Director service. Then RCM applicable. RCM applicable. Then DSA, direct selling agent. So these people will convince public and try to sell bank products. They are like salesmen only. Direct selling agent, they'll salesmen only. But normal salesmen and all what? They'll sell goods. But these people will convince us to take a loan or to take a credit card and all. Okay. So these direct selling agents will be providing services not to us. They are providing services to banks, NBFCs, financial institutions. So, but this direct selling agent should be an individual. Where an individual direct selling agent providing services to bank, NBFC, financial institutions, then they are covered under RCM. Then government providing services to a business entity located in taxable territory, covered under RCM. There are exceptions, sir. Renting of immovable property not covered here. Sir, it doesn't mean, if not covered here, it doesn't mean FCM. Renting of immovable property not straight away FCM. It is covered elsewhere separately. That's why here excluded. Renting of immovable property. It is RCM only, but not covered under this particular provision, covered under a different provision. Whereas transportation of goods and passengers, service given by whom? Government to normal people. It is covered under FCM, not under RCM. Even postal services also covered under FCM. Services in relation to aircraft and vessel are also covered under FCM. Okay. So government services usually RCM. Renting of immovable property covered elsewhere. Whereas transportation, postal services are FCM. Then any person renting a immovable property to a registered person. Sir, yesterday even in exemptions chapter also we discussed this. When exemption, when a immovable property is rented, if it is a residential property and the rent, it was taken on rent by an individual and it is used for his residence, then it is exempted. Understand, sir? immovable property rented is a residential property and the building is taken on rent by individual for his own residence purpose, then it is exempted, otherwise taxable. If taxable, it is taxable under RCM. Understand, sir? There is only one exemption, when residential building taken on rent by individual for his residence purpose, then exempted. In all the other cases, it is taxable under RCM. Okay, then GTA, Goods Transport Agency, sir. Here there is a small amendment, sir. Everybody, please be cautious here. There is an amendment. What? Sir, GTA, previously there used to be two tax rates, 5%, 12%. Now also two rates only, but not 5 and 12, 5% and 18%. Sir, like on September 22nd, 2025, there were like major changes has been made in the GST regarding the rates and all. They completely want to remove the 12% slab. Sir, actually there are like 4 main tax rates applicable, 5, 12, 18, 28. But they want to bring these 4 tax slabs to 3 slabs only, or 3 rates only mainly. So they want to first remove this 12% slab. So to remove 12%, what they did, some were clubbed into 18 and some were brought down to 5%. So GTA service from 12 it was pushed to 18. So GTA has 2 options, 5%, 18%. 5% na without ITC. If a GTA opts for 5% rate, it will not get ITC. If it opts for 18%, then it will get ITC. Goods Transport Agency, which transports goods using a motor vehicle and issues a consignment note. Sir, understand? GTA providing services to a specified recipient, then only covered under RCM. To whom service, sir? Specified recipient. Who is called specified recipient? Cooperative society, factory, society, casual taxable person, partnership firm, body corporate, or any other person registered under GST. So to a cooperative society, factory, society, casual taxable person, partnership firm, body corporate, or any other person registered under GST. For these people, if the services are provided, then they are covered under RCM. Then they are covered under RCM. So, okay. Sir, if GTA opts 18%, then anyhow FCM only. 2 rates are there, right? 5%, 18%. If they opted for 18%, always tax has to be paid by GTA only. If they opted for 5%, then what? RCM. But even though RCM, just like as other, here also there is an option available. What is the option available to other? If he is registered and files a declaration, he can pay the tax under FCM. Same way, even GTA also, if it is registered and files a declaration, it can pay tax under FCM. If GTA registered, files a declaration, then it has the option to pay tax under FCM irrespective of 5 or 18%. Option can't be withdrawn until the expiry of 1 year. Then insurance agent service, where an insurance agent is providing services to insurance company, that also covered under RCM. Then recovery agent service, where a recovery agent providing services to bank, NBFC, financial institution, that also covered under RCM. Then RBI overseeing committee. Sir, RBI to take various decisions and all, it will hire experts from different places. All those experts are empaneled in the RBI overseeing committee. They will not work day to day to RBI, every day to RBI. Whenever a decision has to be taken, they will come and participate in the meeting and put their views. So when these members of RBI overseeing committee providing services to RBI, that also covered under RCM. Members of RBI overseeing committee providing services to RBI, covered under RCM. Then long-term lease of land. What is long-term lease of land, sir? When a land has been given on lease for more than or equal to 30 years, then that is called as what? Long-term lease. So here there is a owner who given it for long-term lease to a promoter or developer, then it is covered under what? RCM. Then legal service. What is about legal service? There is an, okay. So now legal service, sir. Either an individual advocate or firm of advocates. See here, sir. Where an individual advocate or firm of advocates providing service to a business entity whose turnover already exceeds registration limit. Sir, understand? Lawyer providing service to whom? business entity and their turnover exceeds what already threshold limit for registration, then it is taxable under RCM. Then understand, where the service is provided to business entity whose preceding financial year turnover is within the threshold, then it is exempted. Then that is exempted. Okay, sir, A limited is the recipient. A limited turnover is like 10 lakhs only. A limited turnover is like last year 10 lakhs only. So to such person, if service is provided, exempted. A limited turnover is like 70 lakhs. Turnover exceeded the threshold, then it is what? Taxable under RCM. Then the lawyer provided services to central government, state government, union territory, local authority, then also exempted. Or lawyer provided services to another lawyer, advocate to another advocate, firm of advocates to another firm of advocates, then also it is what? Exempted. So see here, sir, again, senior advocate. Here it's about senior advocate. Where a senior advocate provides services to business entity, taxable under RCM. Okay, sir, same as like this one only, sir. Individual advocate, firm of advocate, but here we wrote separately senior advocate. Here also, if he provides service to a business entity whose turnover exceeds or equal to threshold limit of registration, taxable under RCM. Where turnover within the thresholds, exempted. Service provided to government, exempted. Service provided to another individual advocate or firm of advocates where the turnover is less than registration limit, exempted. Where senior advocate provides services to individual advocate or firm of advocates and their turnover is beyond registration limit, then that is what? Taxable under RCM. Sir, now what happens? Sir, a business is having an issue, okay, having a particular dispute. Now they went to a firm of advocates. So who are their first lawyer? Firm of advocates. Okay, now firm of advocate is providing services to whom? This company, A Limited will take. To A Limited, who is providing service, sir? This firm of advocate. Covered under what? RCM. Now the case has become critical. They want like some expert lawyer also to be involved here to win the case and all. Now what this firm has did, it has approached a senior advocate. Now who is providing service? Senior advocate is providing directly to the client or to the firm of advocates. Firm of advocate. So senior advocate providing to firm of advocate again providing to the A Limited, client A Limited. Now both these services are covered under RCM. Sir, what will think usually? When firm providing to this A Limited, who is recipient? A Limited. You think who has to pay the tax? A Limited. Correct only. Now senior advocate providing service to whom? Firm of advocate. Who is recipient? Firm of advocate. Who has to pay tax? Firm of advocates. Will think like firm of advocates, but firm of advocates also will not pay tax. On that also, this A Limited only has to pay the tax. Understanding na, sir? So they are like, sir, actually most of the laws are framed by advocates. Okay, this also framed by whom? Advocates only. They want to be outside the GST. Either their services are exempted or taxable under RCM. They don't want to involve into all this compliance process and all. Okay. So senior advocate provided services to individual advocate or firm of advocate and firm provided to business entity. But on both these services, RCM now who has to pay tax? Both the cases. Business entity only has to pay tax under RCM. Then sponsorship service. What is sponsorship service, sir? Here Virat Kohli sponsoring which brand? MRF. Who is the supplier? Virat Kohli. Recipient? MRF. But who has to pay tax under RCM? MRF. Okay. So but any person, the supplier is like what? Any person other than body corporate and is sponsoring whom? Either a body corporate or firm. Then it is covered under RCM. Let's say, sir, here instead of MRF, it was promoting like tax guru. Okay, is promoting me. Then recipient is whom, sir? Individual. When he is, sir, I didn't wrote BCCA. BCCA again body corporate taxable under RCM. So he is promoting me as an individual. Then it is covered under, it is not covered under RCM. Who has to pay tax? Virat Kohli only has to pay the tax. Any person providing sponsorship service. Then security services. Where any security services are provided by other than body corporate to a registered person. Other than body corporate to a registered person, then also they are covered under RCM. Then short-term lending of securities. Sir, as per RBI requirement, again, Every bank has to maintain certain amount of securities. When there is a shortfall, to fulfill that shortfall, they can borrow it from some other banks also. Understand, sir? Let's say 10% of your deposit should be in securities. But, and it will be checked every fortnight. Fortnight means what? Alternate Friday night. They're gonna check whether they are meeting that condition or not. But a particular bank, sir, on one fortnight, they are having a shortfall of the percentage which they have to maintain. So to fulfill that shortfall, what they can do? They can borrow securities from some other bank. So this is the borrowing bank. It will take securities from lending bank. All this will be mediated through an intermediary. So now lending bank, what it did? It lend securities. Now borrowing bank, afterwards what it will do? It returns the securities. Along with returning the securities, it has to pay extra lending fee. Here there is a service of what? Lending service. Lending of what? Securities. This short-term lending of securities is covered under RCM, not the lending bank. This borrowing bank has to pay tax under RCM. Then business facilitator service. Business facilitator na, these people also, sir. Okay, similar to that of direct selling agent only. They'll promote the bank. Okay, so when a bank new branch has been opened in that area, that bank may not be familiar. So these people try to make that bank as a familiar one and try to explain about that particular bank. So when business facilitator is providing services to bank, NBFC, financial institutions, then that is covered under RCM. Then business correspondent, sir, this is important, sir. Business correspondent providing services to bank, NBFC, financial institution. Sir, what is business correspondent? Sir, banks, instead of starting a branch, they can tie up with certain outside people. Those outside people will act as correspondents of bank. And through those correspondents, certain basic functions of bank can be made. Sir, let's say for me, the bank is 50 kilometers away. Example. So now every time I cannot go to that 50 kilometers and do bank functions. Now in locally, bank may tie up with a business correspondent. Now I'll go to that business correspondent. If I want to apply for a ATM card, I need not to go to bank. Here itself I'll fill the form and give it there. It's equivalent of submitting to the bank. If I want to deposit small amounts of money, I need not to go to the bank. I'll deposit here only. So certain basic functions can be done through business correspondent. So why this option has been made? To extend the banking services to each and every corner of the country. They have allowed business correspondent services also. But how it works means typically, bank cannot tie up with this individual small persons and all. Bank will tie up with a big player who has a lot of network. Let's say for example LIC. Sir, LIC has network in each and every village, town also. Why? LIC agents are there everywhere. Now for a bank, LIC is acting as a business correspondent. Now LIC offices also not everywhere,
but LIC agents are everywhere. Now instead of going to bank, what I'll do? I'll go to my nearest LIC agent who is acting as a agent of business correspondent. Okay, sir. So now what? Sir, business correspondent is LIC. Now LIC has an agent. This agent is called as what?
Agent of business correspondent. So now LIC works on behalf of whom? Bank. But this correspondent works on behalf of, this agent works on behalf of business correspondent. So now here LIC agent, I given the forms and all those deposits and all, I'll not go to directly to the bank. I'll go to whom? LIC agent. Now this LIC agent is providing services to whom? LIC. Nothing but agent of business correspondent providing services to business correspondent. Now LIC is providing services to whom? Bank. Sir, LIC to bank, it is covered under FCM only. But when this agent of business correspondent providing services to business correspondent, then only covered under RCM. Sir, most people will confuse here and will take business correspondent to bank as RCM. It's not like that. Business correspondent to bank, FCM only. Agent of business correspondent to business correspondent is only covered under RCM. Then import of service. Okay, when there is an import of service other than OIDR service, that also covered under RCM. Okay, so total how many are there, sir? 20 services are there under RCM. Okay, see, this is the cheat code to remember. M for music composer, photographer, and second one motor vehicles. Two are there, M related, music composer, motor vehicles. Then A for arbitral tribunal and other services. D for director services and direct selling agent services. So MAD. M for music composer, photographer, motor vehicle. A for arbitral tribunal, other. D for director, direct selling agent. Then G for government, GTA, government and GTA. I for 3 are there, sir. Immobile property related, insurance agent, and even import service also, and even imports also. Then R for recovery agent services, RBI overseeing committee members. Then L for long-term lease of land and even lawyer services. S for sponsorship services, short-term lending of securities, and normal security services also. And then business facilitator and agent of business correspondent. These are the services which are covered under RCM. Then 9.4, sir. 9.4 covers only for specified goods and services. Those specified goods are like what? Only this one is under 9.4. An unregistered person supplying cement to a promoter or developer of a project. What is being supplied, sir? Cement. Then on that cement RCM is applicable. Or else unregistered person supplying capital goods to promoter or developer of a project. So only on this cement and capital goods supplied by unregistered person to promoter or developer covered under RCM, which under 9 subsection 4. Okay. Then 9 subsection 5. Okay, we'll complete this and I'll give break. Nine subsection 5. E-commerce operator means any person who owns, manages or operates digital or electronic facility or platform for e-commerce. So e-commerce operator na, he gives a platform through which the buying and selling of goods can be done online. Okay, that's called, he either maintains a platform, operates a platform, okay, owns a platform. Then that is called what? He's called as what? E-commerce operator. Amazon, Zomato, Oyo, Redbus, Rapido, all these are like what? E-commerce operator. Sir, this 9.5 is important, sir, because it is linked to TCS also. You cannot learn TCS individually if you cannot remember 9 subsection 5. Okay. Sir, by default tax has to be paid by supplier. But 9.3 says like what? Tax has to be paid under RCM. That means whom? Recipient. But 9.5 says like neither the supplier nor the recipient, the tax has to be paid by ECO, e-commerce operator. So first one, sir. The first service is like transportation of passenger services through e-commerce operators. Transportation of passenger. Sir, for transport related, what are the apps available for us? Rapido, Ola, Uber. Then Mahesh Babu comes. Mahesh Babu. Abhibus. Allu Arjun comes for Redbus. It's okay. So all those are related to what? Transportation of passengers. So transportation of passengers using radio taxi, cab, maxi cab, motorcycle, omnibus. Sir, omnibus na, the normal buses only we call them as omnibus, or any other motor vehicle. Radio taxi, cab, maxi cab, motorcycle, omnibus, or any other motor vehicle transportation is being provided. Then neither the supplier nor the recipient, who has to pay the tax, sir? ECO has to pay the tax. That means this Abhibus, Redbus people or Rapido, Ola, Uber, they have to pay the tax. Sir, if you book a auto through Rapido, neither the auto guy will pay the tax nor you will pay the tax. Who will pay? Rapido has to pay the tax to the government. Understand? Here there is an exception, sir. If supplier is a body corporate, what does it mean by body corporate?
company, LLP, corporations. RTC is a, sorry, assuming RTC is not merged into government, then RTC is what? It's a separate body corporate. So RTC buses are like what? Those with respect to RTC buses, supplier is what? Body corporate. And the transportation is through a omnibus, yes, through a bus. Then the supplier is only responsible to pay the tax. Or else like there are Kaveri Travels Private Limited is there. It's also a what? Body corporate. And their buses are listed in Abhi bus, red bus. So what happened? Supplier is a body corporate and the transportation is through a omnibus. Then in such case 9(5) is not applicable. Who has to pay tax? Supplier only will pay the tax. If it is like they, if either they are not body corporates, nor if it is not a omnibus, then the tax has to be paid by e-commerce operator. Sir, I own 3 buses, let's say, and my buses are also listed in Abhi bus. But I'm an individual, right? Then who has to pay tax, sir? Eco only has to pay the taxes. Right. Then accommodation services like hotel, inn, guest house. When the hotel guy, actually the hotel guy is unregistered, then eco will pay tax. When the hotel guy is registered, that hotel person only will have to pay the tax. Then household services like urban company related, plumbing services, electrician, carpenting. Okay, these kind of household services are provided through app called UC. Urban company is an example for it. Then again we need to check original service provider, that electrician, registered or unregistered. If he is registered, he will only pay. If he is unregistered, then eco has to pay the GST. For household services and all provided through eco. If the original supplier is registered, he will only pay. If he is unregistered, then eco has to pay the taxes. Then supply of services by restaurants and eating joints. Okay, so what is this here, sir? Here also, whether the restaurant is registered or unregistered, who has to pay? Eco only. I mean Swiggy, Zomato only has to pay the taxes under 9 subsection 5. But there is an exception, sir. The food is being supplied from a specified place. What is specified place? Specified place means it's a place where restaurant is there and even hotel accommodation is also there. Restaurant is there, accommodation is also there. First condition. Second one, and for accommodation they will charge more than or equal to 7,500 per day. So let's say Novotel. You know Novotel? Hotel Novotel, or else like Taj, okay, or ITC related. So those 5-star hotels and all, where they will provide accommodation and there will be restaurant also. And there per day they will charge more than 7,500. So from such place, if food is being supplied through eco, Swiggy, Zomatos and all, then 9(5) is not applicable. Supplier only will pay the tax. Okay. Then the last one, sir, which is like amended, newly added, supply by way of local delivery through eco. Local delivery, sir, these like Rapido Parcel, Dunzo, Porter, these services are there. Okay, if you need to send any parcel within the town or within the city only, okay, then you are using this local delivery services using eco, Porter, Dunzo. Then who has to pay the taxes, sir? Irrespective of supplier. Okay, only when the supplier is unregistered, then the eco has to pay the tax. If supplier is registered, then supplier only will pay the taxes. So this is covered under 9 subsection 5. Okay. So post break, sir, we'll discuss that exemption related questions and all. We'll discuss those questions and then we'll complete TDS and TCS. Time of supply we may not start today, sir. So tomorrow what we'll do now, we'll start early the class so that we can complete the chapters and all. We'll start at like 4:30 itself tomorrow. Okay, now we'll take break, sir, till 7:45. Then we'll continue.
Sir, we'll solve quickly the exemptions related questions and we'll go to TDS and TCS. Mr. Raman, being a dealer, furnished the following business transactions which took place during the April 2024. Find the GST liability. Sir, this is for goods, sir. We didn't discuss specifically goods, but even in the study mat also we had only one question related to this goods. That was straight away. Sale of plastic bangles, sir, it is exempted. Supply of mobile phones, we seen like when you purchase mobile phone also there will be GST, so there is no exemption, taxable. Sale of printed books and newspapers, exempted. Sale of dates, exempted. Salt also exempted. Organic manure also exempted. Whereas chemical fertilizers are taxable. So only chemical fertilizers and mobile phones are taxable. Then you look at question number 2, sir. Mary Charitable Trust registered under section 12AB of the income tax and also a registered person under GST law. It's a charitable trust only. Okay. It is providing services by way of training or coaching in recreational activities. So training in recreational activities, coaching in recreational activities in the field of sports, culture, art by charitable institution or individual is exempted. Fee from organizing yoga camps or other fitness camps. Sir, here if they mentioned only as yoga camps, then we might have exempted this. But what they referred here, yoga or other fitness camps also. Sir, only yoga is exempted. If it is other fitness camp, then not exempted. That's why it is what? Taxable. Okay. Then organizing fitness camps in Reiki, aerobics, those also taxable. Then library services, sir, exempted. Where libraries will be there towards the end, sir, there is a point, libraries related, that also exempted. Then next one, sir. Chari Charitable Trust registered under 1023B of the Income Tax Act. What are the services? Service by way of accommodation for rupees 1000 per day for 12 days. Sir, it is what? Charitable trust. When exempted, sir, less than 1000 only exempted. Here equal to 1000, taxable only. Fee for convention hall. Sir, the renting of their premises, okay, or the function halls owned by them, I mean for conduction of marriage and all. So those are exempted. Per day it should be how much, sir? Less than 10,000. Here 8,000 only, so what? Exempted. Then shops. Shops situated within the premises of religious place. Sir, fee for convention hall is like 8,000 per day. However, this hall is located outside the premises of the trust. That's why it is what? Taxable. Then shops situated within the premises of a religious premises are rented for 8,000 per month. Sir, up to 10,000 per month. I mean less than 10,000 per month exempted. So less than 10,000. So it is also exempted. Then 4 not needed. Then question number 5, sir. Mr. Nawab, being an individual registered taxpayer and performing artist, provides the following information. What? He performs classical dance. Up to how much exempted, sir? 1,50,000. So this is what? Exempted. Acts in a television serial. Taxable. Acts as brand ambassador. Taxable. Coaching in recreational activities related to arts. Exempted, sir. Like who has to provide, either individual or charitable institution? Here he is what? Individual. So this is what? Exempted. Activities in sculpture making. Nowhere it is mentioned as exempted. So it is what? Taxable. Then performing western dance. That also taxable. Sir, Well-Being Nursing Home has received the following amounts in the month of Jan in lay of various services rendered by it in the same month. You are required to determine its GST liabilities from the details furnished below. What are those? Palliative care. Sir, palliative care also I mentioned yesterday. Like palliative care will not cure the disease but improves the life of, it improves the quality of life of the patient. So that is what exempted. Services provided by blood banks and all. No exemptions are currently what? Taxable. Hair transplant, taxable. Ambulance services, exempted. Then transportation of patients in an ambulance on behalf of state government, that also what? Exempted. Naturopathy, sir, exempted. Plastic surgery, sir, actually plastic surgery comes under what? Cosmetics, taxable. But plastic surgery to restore anatomy of a child affected due to an accident, then exempted. Pranic healing, sir, it's not a recognized medical system, taxable. Then one more thing is there, sir. Mortuary services. Sir, mortuary is covered under negative list. It is not even a supply. Where Schedule 3. Funeral, burial, crematorium services including transportation of the deceased. So there it is what? Negative list. Then question number 7, sir. Synergy Waste Management Limited provided following services to Apollo Hospitals, Chennai during the month of February. What are those? Collection, transportation, treatment and disposal of biomedical waste. Sir, we wrote like exemption has been omitted. So currently what? Taxable. Training and segregation of biomedical waste, that also taxable. Laundry services, taxable. Common biomedical waste treatment facility, all these are taxable only. Sir, look at question number 8. What happened here? X Academy Private Limited provided following services in the previous year. Okay, what are the services? See, X Academy provided manpower supply services to a school. It provided manpower supply services to a school. How much? 12 lakhs. It provided housekeeping services to Kidsy, a preschool. How much? 9 lakhs. So what is the total turnover, sir? 21 lakhs is the total turnover. Okay. Now what? In the current year 25-26, X Academy received advertisement services for rupees 75,000 from Indian Railways. Okay, it received advertisement services for rupees 75,000 from the Indian Railways. Find the following. Who is liable to pay GST? Sir, here who is providing services like Indian Railways will promote the received advertisement services for rupees 75,000. Okay, it received advertisement service. Okay, then Indian Railways is the supplier which supplied what? Advertisement services to whom? X Academy Private Limited. Sir, when government providing any services covered under what? RCM, but excludes Indian Railways. So Indian Railways, if they are providing any services now, then they are covered under FCM only. But actually we wrote under RCM, sir, only transportation, mention it as like clearly Indian Railways, sir. Here we might have written as like here only transportation, but it should be clear like what? Indian Railways. Exceptions here. Transportation of goods and passengers, not just, and even Indian Railways. When Indian Railways is providing services now, then they are like not covered under RCM. So this is covered under what? FCM only. That means who has to pay the tax, sir? Indian Railways only has to pay the tax. Then okay, look at question number 10, sir. Green Tree Society is a registered taxpayer under GST. It provides the following services in the month of October. What? It given a banquet hall rent to the member of society. Okay, for celebrating. Sir, this association has a common hall, function hall kind of bundle that was given to a member for performing a birthday function, which is like what? Taxable only. No exemption we have discussed. And then payment of electricity bill issued by a third person in the name of its members. So what a society did, sir? It collected 1,10,000 from its members and paid electricity department 1 lakh. So 1 lakh is like pure agent. So okay, it just collected from the members and paid to the electricity department. So 1 lakh is not taxable, only the extra 10,000 is taxable. Then contribution per month, I mean every member is contributing. How much they contributed, sir? 8,500 to the association. What is the limit, sir? Residential association, if they are contributing up to 7,500 per month, exempted. Above 7,500 now full amount taxable. So 8,500 into 20, 1 lakh 70. So total taxable value is like 2 lakh 5,000. Then question number 11, sir. Agrofarm Limited, registered under GST, furnishes the following details. First one, receipts from supply of farm labor. Sir, farm labor supply, it is what? Exempted. Then seed testing, soil testing, all those are also exempted. Then charges for warehousing of potato chips. Sir, warehousing of agri produce, rice, those are exempted. Potato chips na taxable. Commission received on sale of wheat, exempted, sir. Where any agri produce is sold on commission basis, that commission is what? Exempted. Then any training is given to farmers for use of new pesticides and all, agri extension services, exempted. Then renting of vacant land to a stud farm, sir. Sir, to stud farm not taxable, but to cattle farm, exempted. Charges for warehousing of rice, exempted. But warehousing of cotton fabrics, taxable. Then retail packing and labeling of fruits and vegetables, those are also exempted. Okay. So now some of you might feel like, sir, we are not able to follow, we cannot remember quickly. Then nothing to be discussed here, sir. You need to again recall, or you need to read once again the exemption provisions. Then question number 12, sir, transportation related. First one, services by way of transportation of passenger by national waterways. Sir, inland waterways, what? Exempted. Service by way of transportation of passengers through stage carriage, non-AC, that also exempted. Transportation of passengers by contract carriage for tourism, taxable. Sir, for tourism, it is what? Taxable. Then there is transportation of passengers from Mumbai to Chennai in a vessel. Sir, this is inland coastal waterways. Inland coastal waterways, it is not for tourism. Then this is also what? Exempted. So the only thing taxable is what? 120 lakhs. Then transportation of goods by rail, sir. What are exempted, sir, through rail? Relief materials and Onam only exempted. Relief material, na, if there is any disaster happened, to give the relief to them, if any materials are sent, that's relief material. Onam means organic manure, newspaper, agri produce, military equipment, milk, salt, edible oil. Only those transportation is exempted. So postal mails, nowhere covered. So what? Taxable. Household effects, taxable. Petroleum products, taxable. But relief materials, sir, exempted, sir. Then newspapers and magazine, exempted, covered in Onam. Milk, exempted. Alcoholic beverages, again, taxable. Defense and military equipment, exempted. Chemical fertilizers, sir, taxable. Organic manure only exempted, not chemical fertilizers related. Then transportation of other taxable goods, 200 lakhs, that also taxable. Then all these are like normal questions only, sir. Let me So look at question number 20. A contract was awarded by Tamil Nadu Slum Clearance Board, government authority, for slum improvement and upgradation of a particular apartment to B Limited of Chennai with a total consideration of 12 lakhs. I mean what? They need to upgrade that particular apartment and all, and they need to renovate and all. Okay. With terms and conditions like what? It is pure service, excluding works contract service or other composite supplies. I mean no good involved, only service element. And the entire work should be completed within
30 days. The said work has been completed as per terms and conditions. Applicable rate of IGST is what? 18%. Sir, see the answer. Pure services excluding works contract or other composite supplies involving supply of any goods provided to local authority are exempted. So this one is what? If any pure service is provided to local authority, only service is only there, no good involved, then that is what? Exempted. Therefore, in the given case, the supply is what? Exempted. Then rework, if the contract is in the nature of works contract. What is works contract, sir? It involves both goods and services, and that is 40% of the composite supply in the value of contract. Sir, what they said here, look at here. Composite supply of goods and services in which value of supply of goods constitutes not more than 25% of the said composite supply provided to central, state government, union territory, local authority, okay, in relation to any activity in relation to a function entrusted to a panchayat, then that is what? Exempted. I mean, government has to discharge a function which they have to discharge as per the article 243G, 243W. To discharge that function, they are taking a input service, but that service involves what? Both good and service. Then it is exempted only when the good element is less than 25%. But in the given case, sir, they said like what? 40%, which is beyond 25. So exemption is not available. Hence it is taxable. The tax liability is how much, sir? Like what is the amount? 12 lakhs into 9, 18%. 1,08,000, 1,08,000. Sir, question number 24, sir. So from here there are like 2-3 big questions which are like important, sir. 24, 25, 26, 27. Sir, this question linked with the supply points also. Supply, and that also related to where any goods and services are transferred between related persons or distinct persons, it amounts to supply even though there is no consideration. But there, interstate movement of conveyance clarification is there. Where any conveyance is sent from one place to another place for transportation of goods and passengers, then that is what? Not taxable. Whereas if it is sent for carrying out any repair work to the truck or to that particular conveyance, then to the extent of repair work it is taxable. Whereas if it is sent for further supply, then the total truck or the conveyance value is supply. Okay. So here, Energy Private Limited is a registered supplier engaged in providing expert maintenance and repair services for large power plants that are in the nature of immovable property which are situated all over India. The company has its head office at where? Bangalore, Karnataka, and branch offices in another state. So their head office is in Bangalore and they have branches in other states. Now what happened? The company has self-contained mobile workshops which are container trucks. Okay, it's like a mobile workshop fitted to the trucks carrying out the repairs. The trucks are equipped with items like repair equipments, consumables, tools, parts, etc. to handle wide variety of repair work. It's a mobile van which can be sent to carry out the repair work and all. Okay, first one. Second one, the truck is sent to the client location for carrying out the repair work depending on the repairs to be done. Okay, and okay, the truck will be sent to where, sir? Client location to carry out the repair and all. Okay. In some cases, even a machine also sent to the client premises along with the truck. A machine also will be sent. Then the customer is billed after the work depending on how much work is done and all. The billing will be done post work. Then sometimes truck will be sent to company's own locations in the other states to carry out. I mean, sir, they are in Bangalore. Let's say they may send the truck to Hyderabad also sometimes. Let's say they have a branch in Hyderabad. Why to Hyderabad? Again from Hyderabad they will be sending it to the client's locations to carry out the work and all. So this is the background. Now they are asking to find out the taxability. See from here, sir, be little clear. Sir, first point, see. Truck sent to own location in Tamil Nadu. What happened, sir? From Karnataka they sent truck to where?
Tamil Nadu. So what happened? Interstate movement of conveyance. That is what? Interstate movement of conveyance, because truck was sent, right? Interstate movement of conveyance. Sir, interstate movement of conveyance, is it supplier? Sir, both these are like what? Distinct persons. Karnataka, their branch only. Tamil Nadu also, their branch only. So there is a interstate movement of conveyance between distinct persons. It is not a supply. To what? Truck value. But however, to the extent of items contained in the truck, it is supply only, deemed supply, even though there is no consideration. Where any goods are sent from one distinct person to another distinct person, it amounts to supply only. Only truck value does not supply. Along with truck, if any goods are sent, for that there is no relaxation. Only for conveyance, relaxation is there, not for the goods. That's why this 3 lakhs has to be treated as what? Supply only, but not this 25 lakhs. Then truck sent to client location in Tamil Nadu for carrying out the repairs. Sir, now what? Truck sent to client location. Sir, when truck is sent to client location, it is not a supply. Why? Sir, understand simple thing, sir. So any technician, any guy who came to do repairs and all, along with him, he'll bring a tool kit, he'll bring machines. Always that value is supplier. Simple thing, sir. You need to have a bore point. For that, the bore machine and all came. That machine costs 40 lakhs. That 40 lakhs is supplier. For borewell, they are charging 70,000. That 70,000 is only supply, right? Same way, here truck sent to client place to carry out the repair. Now, truck value, why it will be called as supply? Only the amount they charged for work done alone will be treated as supply. Neither the spare parts they carried, neither the machine they carried, nor the truck they carried will not be treated as supply. So here, nothing will be treated as supply. Okay? Even the C point also. C point also what happened? Same, truck sent to, machine sent to, and even item sent. But in B point, it was sent to Tamil Nadu. In C point, it was sent within Karnataka. Both places, sir. Only the amount you billed is supply. Not the truck you sent, not the machine you sent, or the spare parts you sent is supply. The amount billed is what? The supply. So you can see D point, they raised invoice for repair work done in Tamil Nadu. How much? 70 lakhs. So this 70 lakhs is supply. And here for repair work 12 lakhs. This 12 lakhs is supply. So what is the total supply value, sir? 3 lakhs, 70 lakhs, 12 lakhs. Okay. So on 3 lakhs, 12%, 36,000. On 70 lakhs, 18%, 12 lakhs 60. And the last one, sir, 12 lakhs. Sir, it is sent within Karnataka only. So what? CGST and SGST, 9%, 9%. Now it is like how much? 2 lakh 16,000. So the total liability is how much? 15 lakh 12,000. Then Basant is a registered supplier of Chennai, received the following. Sir, these kind of questions only actually these days they are asking. Okay, where they'll include 1 or 2 supply related points, 2 or 3 RCM related points, and 2 or 3 exempted related points. They are mixing and asking a question. It's not like purely from exemption. So you should have a cumulative knowledge of supply, charge, exemptions. Then only you can solve these questions. First one, Basant is a registered supplier of Chennai, received the following amounts in respect of various activities. First one, actionable claim received from normal business. Sir, actionable claim. First, is it a supplier? Not a supply. Where mentioned? Schedule 3. Then, commission received as a recovery agent from non-banking financial company. Commission received from NBFC, sir, for recovery agent. RCM. So, RCM means he will not pay tax. Who has to pay? Recipient. NBFC has to pay the tax. So, leave it. Then, he got permission from the municipal authorities to build how many floors, sir? 7 floors. He can construct 7 floors. But with the neighbor, he agreed to construct only 3 floors and received 22 lakhs as a compensation for not building 7 floors. So what is this? Restraining to do an act. He has the right to construct 7 floors, but he is restraining himself for 3 floors only by receiving 22 lakhs. So that's a money received for restraining to do an act, which is a supply only, taxable, 22 lakhs. Then amount received from GHK Limited for performance of a classical dance in one program. More than 1,50,000. So what? Taxable, taxable, taxable. Then amount charged for providing service by way of fumigation. Fumigation means pest control, sir.
Sir, previously fumigation service used to be exempted. Currently that exemption also withdrawn. So fumigation also what? Taxable. Then consideration received for 1 month rent from a registered individual for renting the residential dwelling, but which is used as office. So no exemption available, sir. Taxable. Then amount charged for composite supply of goods and service by way of milling of wheat into wheat flour along with fortification of Karnataka government. But the goods constitutes how much, sir? 48%. But what we said at previous point, it should be within 25%. Here above 25%, sir. So what it is like? Taxable. So question number 26, sir, what? Vishnu Temple Charitable Trust registered under 1023 of income tax give on rent a community hall located in temple premises for how much? 9,550. Exempted while less than 10,000. A company secretary makes payment of LLP registration fee how much? 4,000 on behalf of their client, and he charged a professional fee of 16,000 along with expenses of rupees 4,000 incurred. Sir, he got total 20,000. 16,000 his fee, 4,000 the fee he paid on behalf of client to ROC. So total how much is the supply value? 16,000 only, sir. Sir, for the 4,000 he is acting as a pure agent. He collects from client and pays it to the ROC. So that part is not supply. Only the professional charges 16,000 is what? Supply. Okay, then pharmaceutical company supplies free samples to doctor. Sir, it is not even a supply. Okay, sir, schedule 1 comes only when freebies income tax. It's okay. Here you need to think here what? Schedule 1 deemed supplies. Without consideration, it will be treated as supply only in 4 cases. What are those? Principal to agent. Import of services from a related person in the course or furtherance of business. Third one, between related persons or distinct persons. Then fourth one, permanent transfer or disposal of business assets on which ITC has been availed. Sir, free samples also permanent transfer only. But they didn't mention ITC has been availed. Hence it is not a supply. If they mention like ITC is availed, then you will treat it as what? Deemed supply as per schedule 1. Then what? RTY Limited has given 12 trucks to ABV Transporters Mumbai for transporting goods in various parts of country. Sir, what happened here? Trucks has been given on rent to a GTA, which is exempted. 27, sir. PNR is a proprietary concern. It's almost done, sir. Only one more question is there.
PNR is a property concern, proprietorship concern registered under normal provision. Okay, what are those? First one, amount collected for loading, unloading and warehousing of potato chips, sir. Fee paid for yoga camp, exempted. By charitable trust only, exempted. Interest received on FD, exempted. Professional services provided to foreign diplomatic mission. Sir, services provided by foreign diplomatic missions are exempted. Here, service not provided by foreign diplomatic mission, provided to foreign diplomatic mission. Hence, this is what? Taxable. Then receipts from running an educational institution, sir. Okay, include receipts for providing residential dwelling. I mean, hostel plus school. Okay, still boarding schools are what? Composite supply. Predominant activity is what? Education, which is exempted. Supply value of cost of fuel for provisioning of renting of motor vehicle service to AJL Limited. Sir, supply value includes cost of fuel. What they are doing? They are renting motor vehicle for carrying goods. For carrying goods, sir, not for carrying passengers. Carrying goods carrying passengers covered under RCM. But here they rented what? Motor vehicle which is meant for transportation of goods. So it is not exempted, sir. It is taxable only. Then the last one, sir. So this is like repetitive points only, sir. See, provided security services. Sir, security services provided to a registered person, sir, but it has to be
provided by whom? A partnership firm or body corporate. So look at the RCM, sir. Security services. If you have doubt, see what is covered here. Security services provided by any person other than body corporate to a registered person covered under RCM. Here who is providing? Partnership firm. I mean other than body corporate. Providing to whom? Registered person. So covered under RCM. Loading, unloading and packing of tomato ketchup. Taxable. Providing security services to Dev Trust in an unregistered person under GST. Taxable, sir. Taxable under what? FCM. Then renting of motor vehicle for carrying passengers to GBM Travels Limited. Travels Limited. It means what, sir? Body corporate. So renting of motor vehicles by other than body corporate to a body corporate, and it includes fuel cost also. What? RCM. Then provided renting of motor vehicle service for carrying of passengers to a partnership firm. Partnership firm now what? Other than body corporate. Then it is what? Taxable under FCM. Sir, this fourth point is like what? To a body corporate. So covered under RCM. Fifth point is what? Provided to other than body corporate. So covered under FCM. Then received legal consultancy services. Sir, it's not provided. Received legal consultancy services. Sir, legal services are taxable under RCM. So on this 90,000, he only has to pay tax under RCM. Not the recipient. He only recipient here. So he has to pay the tax under RCM. Then services provided to Gujarat government administration under a health training program, whereas 80% of the total expenditure for the said program is borne by Gujarat government. So this is like too specific, sir. We didn't cover this point. Okay. As per the suggested answer, it was said like what? More than 75% of the expenditure, if it is met by government, then it is what? Exempted. Okay. So with this we completed what? The exemptions related, sir. Now we are moving on to TDS, TCS. So as of now we completed what? Question number 2 related, question number 3 related. Now we are starting with 4A. 4A, sir, 4A in any case, the question will be either from TDS, TCS, if not annual return. Annual return we already discussed what? GSTR 9 or 9C, both. Okay, that question also can be asked in some MQPs and all. We can see annual return related questions also. That's why, if not, there is a chance of even asking from annual return also. TDS. TDS means what? Tax deducted at source. So TDS mostly applies to government and government authorities. It applies to normal people only in case of metal scrap. Rest all the cases it applies only to government and government related persons only. Okay. See, tax deducted at source. Where a deductor. Who is deductor, sir? Actually, sir, TDS will be deducted by recipient, because recipient makes the payment. When he is making the payment, he will deduct certain amount as tax and will pay directly to the government. So TDS will be deducted by whom, sir? Recipient. Okay. So deductor being a recipient, if recipient is any one of these categories, then TDS will be applicable. What are those? If they are like department or establishment of central state government, department or establishment of central state government, local authorities, government agencies, or any authority or board set up by an act or established by government where more than or equal to 51% voting power is there. if they are like societies established by central government, state government and local authorities, PSUs, or when they are like any other person supplying metal scrap being a registered person. Sir, when unregistered person supplies metal scrap, RCM to a registered person. But if a registered person supplies metal scrap, TDS is applicable. So once again, sir, to whom TDS provisions are applicable? If the recipient is government, department or establishment, or local authority, or a government agency, or any authority or board set up by an act or established by government where there is 51% or more voting power. If they are like societies established by central government, state government, local authorities, PSUs, or they are like supplier of metal scrap, then TDS has to be deducted where the value of supply of taxable goods services are both. Sir, e-way bill na will take which value? E-way bill applies when the consignment value is more than 50,000. There consignment value means we checked including tax. Here it is excluding tax, and the value of supply of taxable goods and services are both. Only the taxable amount. Sir, if the consignment consists of, contract consists of both taxable and exempted, we need to check only the taxable part alone should be more than 2,50,000. Excluding GST, the value of supply should be more than 2,50,000. Even exactly 2,50,000 also TDS not applies. Understanding na, sir? What are those? TDS has to be deducted where the value of supply of taxable goods services are both under a contract exceeds 2.5 lakhs. Okay, excluding GST. Then what is the rate of TDS? If it is intrastate, na, CGST 1%, SGST 1%. If it is interstate, na, then 2% IGST. Intrastate 1% CGST, 1% SGST. Interstate 2% IGST. Sir, once again, to whom TDS provisions are applicable? Government, department or establishment, government agency, government authority, or a society, an authority or board which is set up by an act or established by government where 51% of voting power. Society is established by government, PSU. Then where a registered person supplying metal scrap. Then what is the TDS rate, sir? One intrastate na 1, interstate na 2%. When it applies contract value, that also taxable value of goods services are both exceeds 2,50,000, that also excluding GST. Then in the following cases, TDS is not applicable. When goods are supplied from one PSU to another, TDS not applicable. Where supply of goods and services takes place between one person, sir, like one department to another department, one authority to another authority. So, okay, within themselves only, among those government departments only, if the transactions are there, then TDS is not applicable. Then, where location of supplier and place of supply are in one state, whereas recipient is in different state. This is important, sir. Okay. Sir, I am telling one place of supply provision also to make sure you will understand this. 12 subsection 3A is a provision related to place of supply. It covers with respect to services related to immovable property. With respect to them, what is the place of supply? Location of immovable property itself is the place of supply. Clear? Now look at this example, sir. A construction company in Hyderabad is constructing a bus complex to AP state government in Hyderabad. Sir, why AP government needs a bus complex in Hyderabad? Because every day thousands of buses will go from AP to Hyderabad. So those buses will halt there. To halt there, a bus complex is needed. That's why AP government constructing where? In Hyderabad. Supplier is whom? Hyderabad based construction company only. Recipient, AP government, which is in AP. But the construction is in Hyderabad. So place of supply also where, sir? Hyderabad. So come to the conclusion, sir. Location of supplier where? Hyderabad. Place of supply where? Hyderabad. But location of recipient is where? AP. Sir, LOS, POS are in same state or different states, sir? So technically it is what? Intra. That means which TDS will come? CGST, SGST. That means Telangana GST and Central Good GST. But that couldn't be taken or used by the recipient who is in AP. So there is a technical problem here, okay, which couldn't be sorted out. So it's like a dead end kind of. That's why in this case they don't have any other option available. So they said like in this case TDS is not applicable because as per rule intrastate CGST and SGST has to be deducted, but recipient is in AP, I mean other state. He can use it only if it comes as IGST, but it is coming as like what? CGST and SGST. That's why in this case TDS is not applicable. What is the case, sir? Where location of supplier and place of supply are in one state, whereas recipient is in a different state. Then what else? Where goods and services are exempted, supplies are non-taxable supplies, or transactions are covered in Schedule 3, RCM transactions, or where supplier is unregistered. What are those, sir? Goods and services are exempted, non-taxable supplies or transactions are covered in Schedule 3, RCM transactions, and supplier is unregistered. So now once again, sir, in which cases TDS is not applicable? With PSU to PSU, among the government departments, authorities only, 2. LOS, POS in one state, whereas LOR is in a different state. 4th one, exempted supplies, non-taxable supplies, then Schedule 3 transactions, RCM transactions, and in case where supplier is unregistered. Then TDS on metal scrap, where a registered person supplying metal scrap to a registered person while making payment, TDS has to be deducted. Okay. Then TDS has to be deducted on value of supply excluding GST part. The amount of tax deducted should be deposited to the government by when? 10th of succeeding month. Every registered person is required to deduct TDS shall file written in which form, sir? GSTR 7. We discussed in written chapter itself. And it has to be filed by 10th of succeeding month. If TDS amount is not deposited to the government by 10th of succeeding month, not deposited by 10th of succeeding month, then interest at a rate of 18% per annum is applicable. Okay. Then if TDS is deducted, sir, I am the recipient. Government deducted TDS to me. Government department or establishment. Then the TDS deducted will be reflecting to me in my cash ledger, not in credit ledger. Sir, every registered person will have 3 ledgers. Liability ledger. All the liabilities will be there in the liability ledger. Credit ledger consists of input tax credit. Then the third one, cash ledger. Actually, we'll add cash into the cash ledger. But the TDS or TCS amounts, if any deducted, that would be reflecting into the cash ledger. Sir, why cash ledger? Sir, credit ledger has restrictions. Like in ITC chapter, we discussed the rules for apportionment and all. How a particular credit can be adjusted. IGST to be adjusted first with what? Then with CGST or SGST. Then CGST with CGST, then IGST. SGST with, then with IGST. But those rules are not applied to cash ledger. Cash ledger you can adjust anyway. The adjustment rules are available only for credit ledger. For cash ledger, no rules are applicable. It can be adjusted for any tax payment. So the TDS, TCS deducted will be reflecting where? Cash ledger or credit ledger? Cash ledger. And one more thing, sir. In question you will see, but that was actually omitted in practical way. What does that mean? Previously, I mean, when TDS was originally introduced, the deductor has to give a certificate, just like as in income tax, proof of TDS form 16 will be given or form 16A will be given. Same way in GST also, if TDS is deducted from the date he deposits the tax, by when he deposits the tax, are usually 10th of succeeding month. From there, within 7 days, the deductor has to give a deduction certificate in GSTR 7A. Has to give a deduction certificate in GSTR 7A to the supplier. Okay, that rule used to be there. But currently, the GSTR 7A concept is not there. Why? Once this particular deductor files GSTR 7, that gets automatically reflected to the supplier through his GSTR 2A or 2B. Okay. Sir, in 2B, what we thought initially, only input tax rate will be reflected. But in through 2B now, even the TDS amounts deducted will also get reflected. Now we are into what? TCS. TCS means what, sir? Tax collected at source. Sir, this TCS concept applies to ECOS. ECOS na? e-commerce operators who are not covered by 9 subsection 5. Sir, who are covered under 9 subsection 5? 9 subsection 5. Before break we discussed. Which kind of e-commerce operators are covered? First one, transportation of passengers related. In specifically we need to know, sir, transportation of passengers also there is an exception. What is the exception there? Omnibus. Supplier is whom? Body corporate. When supplier is body corporate and transportation is through omnibus, then that is excluded from 9 subsection 5. They are excluded na, covered under TCS. Understand, sir? All the e-commerce operator covered under 9.5, then TCS not applicable. If they are not covered under 9.5, then TCS is applicable. So passenger transportation related usually 9.5, but this omnibus people are excluded there, so they are covered under where? TCS. Then accommodation services, when covered under 9 subsection 5? Accommodation related, sir. Every time eco only has to pay tax, huh? When? Accommodation related. When the supplier is unregistered, then eco will pay tax. If supplier is registered, then supplier only has to pay the tax. It will be covered under TCS. The next third one, sir, household related services. There also what we discussed there, if supplier is unregistered, then only eco will pay the tax. If supplier is registered, supplier only has to pay the tax. TCS will be applicable. Fourth one, restaurants and eating joints. Who has to pay the, sir? Eco only will pay. But if it is from specified premises, what is called specified premises? Restaurant plus accommodation, and for accommodation they'll charge more than 7,500 per day. So those people again covered under where? TCS. Okay, they are not covered under 9.5, so they are covered under TCS. Okay, na? So any person who is not covered under 9 subsection 5 covered under TCS. So then Amazon, Myntra, Flipkart, these are covered under 9 subsection 5. Amazon, Flipkart, Myntra, these covered under 9 subsection 5 or not? Check. We discussed complete 9 subsection 5. You just need to, you need not to open the pages also. I already revised also. It's okay. You just have to identify whether Amazon, Flipkart, Myntra covered in the list which we have discussed just now. What are the services covered, sir? First one is what? Tell, confidently tell. What is the first one? Transportation of passengers. Amazon, Flipkart, Myntra related to transportation. Second one, accommodation related, covered. Then third one, household services like carpentering, plumbing and plumber and all related. Then restaurants and eating joints, no. Then local delivery services like Potter, Dunjo and all, no. So then means what? Amazon, Flipkart. Okay, you are a seller, you listed your goods in Amazon, then for you TCS applicable. You listed your goods in Flipkart, then for you TCS is applicable. So TCS applies to e-commerce operators who are not covered by 9 subsection 5. Sir, able to understand, sir? So TCS applicability is important, sir. TCS applies to all the e-commerce operators who are not covered by 9 subsection 5. It's okay now. Every e-commerce operator not being an agent or distributor, every e-commerce operator makes supplies to any other supplier being a registered person. So a eco makes supplies to another registered person. I mean every eco, when the supplies are made through such platform plus extras are payment also collected by eco, plus payment also collected by whom? Eco. If the payment is also through eco, then TCS is applicable.
Sir, when TCS applicable, sir, not covered under 9 subsection 5, but they are like ECOs. So ECO, when he allows any supplies made through such platform and the payment also collected by him, in such cases TCS is applicable on net value of supply. On what? Net value of supply. What is the TCS rate, sir? Interest rate na 0.5% IGST, interest rate na 0.25% CGST, 0.25% SGST. Okay. Then net value of supply. What is net value of supply, sir? Gross amount of sales made through such a platform in a month. So TCS will not be deducted transaction wise, monthly wise. So let's say one particular seller. So let's say I sell furniture and I listed my furniture through Amazon. Okay. So now we need to check the total furniture sales I made through Amazon in a month. I made 30 lakh sales through Amazon. Take that 30 lakhs. Out of them, if any GST included, na, subtract. Okay, then if any returns are made, obviously online na, there may be returns. 5 lakhs returns are there. Now from 30, what we have to do? Subtract 5 lakhs. Then the commission of ECO. Okay, let's say Amazon is taking 1% commission. 30 lakhs into 1%, some 30,000. So now subtract that 30,000 also. From 30 lakhs, if any GST element is there, subtract. Returns are there, subtract. ECO commission is there, subtract. Then that is called as what? Net value of supply. On that net value of supply, what? TCS has to be collected. What is the rate of TCS? 0.5% IGST. CGST, SGST na? 0.25, 0.25. Sir, when intrastate na CGST, SGST, interstate na IGST. What are the TDS rates? 2% IGST, 1% CGST, SGST. Okay. Sir, clarification. If at all, in between buyer and supplier, two ECOs are involved. One is buyer side ECO, the other one is like supplier side ECO. Then since two ECOs are involved, who has to deduct? TCS. Who has to deduct, sir? The TCS has to be deducted by the immediate next ECO to the supplier. Sir, I'm a buyer. I'll be finding the product in one ECO. I mean, let's say I am searching for a product in Flipkart. Now in Flipkart, some other ECO has listed their products in Flipkart. Now I clicked on the Flipkart. Now from that Flipkart, the order was forwarded to another ECO. Now that other ECO has actually confirmed the order to supplier. So are able to understand, sir? Flipkart, my seller is not directly listed in Flipkart. I am the customer. I am searching in Flipkart only. But the seller is actually not listed in Flipkart. He may be listed in some ABC app. Okay. Now that ABC app will not have much traffic. That's why what ABC app is doing, it's listing its product even in Flipkart. Now in Flipkart, I selected a product. I placed order. But that order will be forwarded to whom? ABC app. Then from ABC app, it will be forwarded to whom? Supplier. Now the payment also. I'll make the payment to whom? Flipkart. Flipkart will take its commission and Flipkart forwards it to ABC app. Now ABC app will take its commission and pays it to supplier. Okay, na, sir? So, okay. So now who has to collect TCS? Not the Flipkart. Flipkart is buyer side. That ABC app is on supplier side. That supplier side ECO has to collect the TCS. Then issue 2. Sir, supplier himself is also an e-commerce operator. Buyer is there. Again I searched in Flipkart. Now the supplier who is there, na, he himself is also an ECO. But still, whoever is the middle ECO is there, that one only will collect the TCS. Then procedural aspect, sir. TCS has to be remitted just like as TDS within 10 days from the end of the month. Then ECO has to file a statement containing the details of goods and services which are supplied through his platform. Okay, through which form, sir? GSTR rate. By when? 10th of the succeeding month. If there is a delay, interest payable at a rate of 18% per annum. The details of service supplies furnished by ECO will be matched with GSTR1 of supplier. The details of supplies furnished by ECO will be matched with GSTR1. This is important, sir. Sir, I am ECO. Okay, I am saying like through my platform, I am saying like Manjunath has sold 30 lakhs. I am reporting in my GSTR rate. I reported that Manjunath monthly sales through my platform is like 30 lakhs. Now minimum Manjunath should show his supplies in GSTR1 how much? 30 lakhs, right? So Now what I reported in GSTR 8 and what he reported in GSTR 1 will be cross-checked, will be compared and verified. Okay, where there is a mismatch, sir, I am showing it as 30 lakhs, whereas he showed only 28 lakhs. How much is there difference? 28 lakhs. Now for the 20 lakhs difference, it will be communicated to the both the parties. Either he should correct it or I should correct it. If none of them corrects, then they'll think like the mistake is done by the supplier only, Manjunath only. So what? Where there is a mismatch, discrepancy shall be communicated to the both the parties. And if supplier does not rectify, then discrepancy shall be added to outwards of supplier in the succeeding month in which discrepancy is communicated. TCS credit also reflects where? Electronic cash ledger. And not only GSTR 8, sir, every e-commerce operator is mandated to file a yearly return also, like annual return. What? Which forms are GSTR 9B by when 31st December of the following financial year. Okay. Then where ECO discovers any omission, incorrect particulars before scrutiny, audit or inspection. Sorry, he files GSTR 8. But in GSTR 8, he identified that there is some omission, mistake, correction and all. Then he can rectify it by when 30th November of succeeding financial year or actual date of filing annual return, whichever is earlier. Then an officer not below the rank of deputy commissioner can issue a notice to ECO, asking to furnish the details regarding volume of goods and services are both supplied and stock lying in warehouse. So department has some doubt on Manjunath. So whether he is reporting sales correctly or not. Now first before they go for that inspection verification to his place, they'll ask me details. So now give a report of Manjunath, how much sales he is making through your platform, how much of his stock is available in your warehouses or godowns. So I'll have to reply to the GST deputy commissioner or above officers. Within how many days, sir? I need to provide within 15 working days. If I fail to provide within 15 working days, then there will be a penalty of rupees 25,000. Okay. So now we'll be moving on to the question, sir. Sir, sometimes here a straight theory question also can be asked. Mr. Ahmad, if I only read given questions in exemptions, then it's enough for exam. Yes, mostly it is enough. Briefly explain the concept of TDS and TCS. Sir, they'll talk here background of TDS also. See, okay. TDS is a system initially introduced in income tax. Okay. It is one of the modes and methods to collect taxes under which certain percentage of amount is deducted by a recipient at the time of making payment to supplier. So understand what? TDS is a system initially introduced where income tax. Okay, fine, that is. It is one of the method to collect taxes under which a certain amount is deducted by recipient at the time of making payment to supplier. Then it is similar to what? Pay as you earn. Okay, so when you are paying, when you are earning itself, you are paying the taxes. Like let's say, sir, salary people, Instead of they accumulating and paying tax at a time, every month when they earn, their tax itself also get deducted every month on month. So like pay as he earns. It also known as what? Withholding tax in many other countries. It facilitates sharing of responsibility of tax, okay, government. It acts as a powerful instrument to prevent tax evasion and expends the tax net as it is provided to creation of audit trail, okay. Then section 51 of the act provided for deduction of TDS in certain circumstances. This section specifically lists out the deductors who are mandated by the central government to deduct tax at source, the rate of tax deduction and the procedure for remittance of tax deducted. Then TCS. On the other hand, TCS has similarities with TDS as well, with few distinctive features. TCS has similarities. TDS refers to tax which is deducted when the recipient of goods services makes payment under a contract, whereas TCS refers to tax which is collected by ECO when a supplier supplies some goods and services through its portal on the payment for the supplies collected by the ECO. So 52 provides for collection of TCS. This section specifically lists out tax collecting persons who are mandated by central government, nothing but whom are e-commerce operators only. Okay, the amount of tax deducted or collected will be reflecting in electronic cash ledger. Then question number 2, what? Explain the conditions under which TDS should be deducted and also identify the situations it is necessary to deduct TDS. First one, TDS is required if all the following conditions are satisfied. What are those? Value of taxable supply is more than 2.5 lakhs. The value shall exclude tax and cess. If the contract is made for both the taxable supply and exempted supply, the taxable value alone should be more than 2.5 lakhs. Then, where the location of supplier and place of supply are in the same state. Sir, same state now what it is? Intrastate. Then TDS has to be deducted at what rate? 1% CGST, 1% SGST. When location is of supplier in state A, place of supply is in B, then what? Two different states. What tax are? Interstate. Then TDS has to be deducted at a rate of 2% IGST. Where the location of supplier and place of supply is in state, where the location of supplier in state A, place of supply is in like state B, then also it is interstate. TDS has to be deducted at a rate of what? 2%. Okay. Then TDS is where advance is paid on or after 1st October 2018, then on them TDS is applicable. Sir, actually GST introduced from 2017, 1st July, but TDS provisions are made effective only from 1st October. That's why they said like if advance is paid on or after 1st October, then TDS makes applicable. When TDS is not required, when the taxable value is like within 2.5 lakhs, then if they are like exempted, if they are like non-taxable products like petroleum products and all, where the supplier had issued an invoice. So at this point we didn't wrote in notes. Okay, see, where supplier had issued an invoice for sale of goods in respect of which tax has been deducted under VAT law before 1st July, but the payment is made after GST. I mean, already in the VAT Act they deducted TDS, but the payment is made after introduction of GST. In such cases, again they will not deduct TDS under GST. Then LOS and POS are in one state, whereas location of recipient is in a different state. Then look at here, sir. Supplier X makes a supply worth 11,800 to a municipality where the contract for supply is for how much? 15 lakhs. The rate of GST is how much? 18%. Sir, first, what is the contract amount? 15 lakhs. Contract amount 15 lakhs, which is more than 2 lakh 50. Okay, fine. So TDS applicable. Sir, this 11,800 is what? Inclusive of GST. We need to deduct TDS on inclusive of GST amount or excluding GST amount. So 11,800 into 100 by 118. How much? 10,000. So 10,000 into CGST, SGST, 1%, 1%. 100. Then come to question number 6, sir.
X Limited supplier has received two different purchase orders from Education Department. Education Department, a unit of State Government of Tamil Nadu specified under section 51. The details of two purchase orders are like how much? Purchase order 1 is for 3 lakhs, which includes tax of 60. Sir, if you remove tax, how much? 2 lakh 40. Above 2.5 or within 2.5? Within 2.5. TDS applicable or not applicable? Not applicable. Order number 2, 3 lakh 50, so which is above 2.5. So here TDS applies. Okay, so person has received the goods in the month of July. The bills are approved and payment is made in 15th August. So TDS applicable. So what is the quantum of TDS, sir? 3,50,000 into 2%. How much, sir? 7,000 is the TDS to be deducted. Last date for payment of TDS, 10th of succeeding month. Okay, whether GST or 7A has to be issued. Sir, currently it is not there. But in this question still the answer is there. But currently you should understand what GST or 7A concept itself is not there. But since it is there now I am discussing. Okay, what is the date of furnishing of certificate GST or 7A? Within 5 days from the date of
crediting the amount to the government, GST or 7A has to be issued. By when GST or 7 has to be filed? 10th of succeeding month. Penalty for late furnishing of GST or 7A. Okay, there is no penalty for furnishing GST or 7A delayedly. Sir, question number 7, sir, there is a big mistake in question number 7, which was done by the institute. Okay, which I also identified recently. So, what's the mistake, na? So, this is the question they have copied from CA material. Okay, when they copied,
they didn't copy it properly. Okay, didn't copy it properly. Na? They want to change the question, but the changes were not done properly. Or else, like if question changed, na, then properly even answer also has to be changed. But they changed only question, they didn't change properly the answer. So here, what happened means, Raj departments registered in Delhi is engaged in supply of various goods and services. Okay, in CA question here instead of Raj departments there will be some other name. Delhi also common only, but some other name they kept. Okay, I'll explain the question, sir. Sir, everybody important. So this question, like, get proper clarity, sir. It has provided the information related to the supplies made, the contract values and the payment due against each of the item in the month of October are as under. First one, supply of stationery to fisheries department, how much, sir? 12,60,000. Payment made is how much? 2,50,000. Sir, usually what we'll check, contract value is how much? 12,60,000. Okay, and they said inclusive of GST. You do exclusive of GST, how much? 12,60,000 into, what is the tax rate given, sir? 18% into 100 by 118, you do how much? 10 lakh. Okay, something more than 2,50,000. Actually what? TDS applicable. It's okay. So in any way we think like what TDS should be applicable. But in answer they wrote like what? They didn't even mention any TDS amount. Actually they should have mentioned how much, sir? This amount. What amount, sir? This 2,15,000. On that how much TDS to be collected, sir? Since Kolkata, Delhi na interstate IGST. So 2,15,000 into 2%. How much TDS should have been collected? 4,300. But in answer they didn't mention anything. Okay. Why na? In CA final, sir, this same question, just the name change and the value is like 2,60,000. But our institute wants to change the answer, I mean question, right? So made it as what? 12,60,000. Sir, if you check 2,60,000, what happens? 2,60,000 into 100 by 118, what happens? Less than 2,50,000. So TDS is not applicable. Okay. Sir, at least the problem that it is like, they only copied the answer. Even in CA material, at least there will be note points. For every point, they'll give explanation also. If in our institute material, they didn't even brought that explanation points also. That's why we couldn't find out that one easily. Okay, then next one also, sir. Supply of car rental services to Municipal Corporation of Delhi. Sir, again what? 12,95,000. Again what we have to do? 100 by 118, which is more than 2,50,000. We'll think what? TDS is applicable. But here both are in Delhi. So what? CGST and
SGST. But again in the answer, sir, they didn't given anything. Okay, again what happened? Actually it is 2,95,000. But our institute made it as what? 12,95,000. Sir, if you check 2,95,000 into 100 by 118. Exact 2,50,000. TDS is not applicable. But they made it what? 12,95,000. So corresponding answer should have been changed. But they didn't change answer. Now what happens, sir, here? 1,200, 1,200. Sir, if they ask a question, now they will not ask this question. They'll ask that from the CFNL question only they'll ask. So you should be clear, sir, what here they given wrongly here 12,60,000, 12,95,000. Actually they framed the question properly. What? First point they want to test whether you know that provision below 2,50,000 TDS applicable or not. That's why first point tested on that. Second point also they framed beautifully like what? Exactly 2,50,000 you might have confusion whether TDS applicable or not. So exactly on that point they have tested. But our institute made what? Simply added 12,60,000, both are more than 2,50,000 only. Obviously TDS is applicable, but in answer they didn't take any TDS. So now correct the answer, sir. Here how much to be taken? 1,200, 1,200. Okay, then third one, sir. Supply of heavy machinery to PSU located in Uttarakhand. Sir, Delhi, from Delhi where they supplied? Uttarakhand. How much? 5,90,000. More than, sir, this is including GST, but still it will be more than 2,50,000 only. So how much, sir? IGST 25,000 into 2%, 500. Then supply of taxable goods to a Delhi office of National Housing Bank, a society established by government under the Society Registration Act. Sir, this is what within the state. So CGST and SGST. 6,49,000 means more than 2.5 only. How much, sir? 50,000 into 1%, 1%. 500 CGST, 500 SGST. Then fifth point, sir, redental, whether TDS applicable or not. If not, because what is the reason? If yes, why applicable? Sir, supplier is from where? Sir, here understand, Rajya Departments is the supplier. Location of supplier Delhi. Here, who is the recipient, sir? Andhra Bhavan for Andhra Pradesh. So location of recipient is what? Andhra Pradesh. So location of supplier Delhi, location of recipient Andhra Pradesh. Place of supply? Delhi. So LOS, POS are in Delhi, whereas recipient is in Andhra Pradesh. So what? TDS is not applicable. TDS is not applicable. Then supply of printed books and printed postcards. Okay, sir, you know printed books are exempted from GST. Okay, where we discussed even in the exemptions first question it is there. Even if it is not there also, here clearly they said like what? Exempted from GST. What is the books value here? Out of total contract value 9,72,000, books value is how much, sir? 7 lakhs. Then balance is how much? 2,72,000, which is including GST. So we need to do what? Into 100 by 118. How much? Which is less than 2,50,000. So TDS applicable or not applicable? Not applicable. Then maintenance of street lights in municipal area of East Delhi. Okay, the maintenance contract entered with Municipal Corporation of Delhi and involves replacement of lights also. Okay, however, the value of goods is not more than 25%. Hence it is what? Exempted. Since it is exempted, TDS is not applicable. Okay, then question number 8, sir. Briefly summarize the provisions related to TDS under GST law. The concept of TDS is one of the ways to collect the TDS. For whom it is applicable? Department, establishment, local authority, government authority, authority or board set up by Act of Parliament, societies, public sector undertakings. Okay. When TDS has to be deducted, tax is required to be deducted if the total value in supply exceeds 2,50,000. Okay. Where the total value of taxable supply is more than 2.5 lakhs under a single contract, the value shall exclude taxes. Only the taxable value alone should be more than 2.5 lakhs. Intrastate na 1% CGST, 1% SGST. Intrastate na 2%. Okay. Then also the same theory question kind of only. Who is liable to TDS? Then Question number 11. Discuss in brief consequences for not complying with the provisions of TCS. Okay. TCS not collected. Then there is a penalty, sir, under 120 to 1. How much? 10,000 is the penalty. Or the amount not collected or short collected, whichever is higher. The amount of TCS not collected or 10,000, whichever is higher is the penalty. TCS collected but not paid to government, then that amount can be recovered by the government as if it is a arrears of tax due. Late filing of TCS returns. Then we already discussed GST or rate related late fees and all were in returns chapter only. Then write short notes on provision for collecting TCS. Sir, here correct them, sir. The rates are like old. What are the rates are currently? 0.25% CGST and 0.25% SGST only. On what TCS has to be deducted? Net value of taxable supplies only. TCS has to be deducted. Net value of taxable supplies. Okay. And on other than services notified under section 9(5). It's okay. All these are like common procedural points only, sir. I'm not reading out. Then again, these are like TDS related point only. This point important, sir. Question number 14 important. This is like a June 2025 exam question where they mixed both 9(5) and TCS. If you don't have proper clarity about 9 subsection 5, then you can never answer this question. See, Flycart is what? Is an e-commerce operator registered in Maharashtra, which owns and runs a portal for the supply of goods and services of its members to the public in India. The following transactions are reported by Flycart for the month of January. See, Flycart has a prior agreement with DF Hotels Lonavala, an e-commerce operator registered in Maharashtra. Okay, Flycart has prior agreement with whom, sir? DF Hotels. Okay, for booking of rooms. A customer, sir, with whom an e-commerce operator registered in Maharashtra. I mean, this hotels is also a eco which is registered. Sir, under 9 subsection 5 for accommodation related, when 9(5) applies, supplier should be unregistered. Here supplier means what? DF Hotels. Registered or unregistered? Registered. That means 9(5) is not applicable or not applicable, sir? 9(5) not applicable. Then what applicable? TCS is applicable. Okay, a customer in Mumbai has booked room for 6 nights 7 days. Okay, the total raised advance is how much, sir? 2 lakhs, and I received how much? 1,92,000 from Flycart. So the TCS has to be collected on what? 2 lakhs. So 2 lakhs into 0.5%. How much, sir? How much? 1,000. It is like how much? 1,000. The next one, sir. Q Limited is a registered person in Odisha. Q Limited providing the services of what? Transportation of passengers through omnibus. Covered under 9(5) or not covered under 9(5)? Why? Body corporate transportation through omnibus. So not covered under 9(5). So covered under TCS. So how much, sir? 1,80,000 into 0. Sir, first we'll check whether like intrastate or interstate also, sir. Here in the previous case, sir, supplier is what? Flycart, Maharashtra. Then, okay, not that one, sir. We need to check what the actual transaction between. The customer is also from Mumbai. Hotel is from where, sir? Lonavala, which is also in Maharashtra only. Since both are in Maharashtra only, CGST and SGST has to be deducted in the first case. I mean 0.25, 0.25. In this case, sir, Q Limited is what? Odisha. Okay, and the passengers has been transported. That also to whom, sir? R Limited. They also were Odisha only. Q Limited registered person providing transportation through whom? R Limited. They also Odisha. Both is same state only. Again what? CGST, SGST. 1,80,000 into 0.25%, 0.25%. Then third one. Further, Q Limited also provided transportation of passengers through other vehicles for R Limited. Third point, see, sir. Further, Q Limited provides transportation of passengers through other vehicles also. Then covered under TCS or 9(5). 9.5 only discovered. Why? Because only omnibus cover is exception. So this is other vehicles. So covered by 9.5, not covered under TCS. Then goods sold by G Limited, a registered supplier in Karnataka to H Limited. Sir, where is like G Limited a registered supplier from Karnataka to whom? H Limited another registered supplier in Tamil Nadu. So it is what transaction, sir? Interstate transaction. Okay, and this is what? 2,36,000 including GST. So you do what? Excluding GST. So it is what? 2 lakhs. 2 lakhs. From their sales returns also has to be subtracted. How much, sir? 90,000. So then what is the net value? 1,10,000 into IGST, sir, here 0.5 percentage. How much, sir? 550 is the amount to be deducted as TCS. Okay. Question number 14. Then 15 about identify the cases where TDS is not required. Then 16 also, sir. Every registered person under GST is required to deduct TDS. Comment on the validity. Not every registered person is required to deduct TDS. To whom TDS is applicable? We need to again write out the list. Write short reference on time of supply under RCM. Okay, time of supply points are that one. It's okay. With this, what we have completed the TDS, TCS also. So we completed 2 properly. Question number 3 related properly, and even question number 4A. So now time of supply, value of supply, place of supply. These 3 together maximum covers what? 4B, 5A, 5B. It's okay. So 2, 3, 4, 5. So tomorrow, sir, we have little bigger target, sir. Time of supply, value of supply, and even place of supply also. So we'll start tomorrow at what time? 4:30 only. Delhi, Puducherry and Jammu and Kashmir being union territories are considered as states, right, for SGST rather than UDGST. Yes, you are correct. It's okay all. Thank you all. So we'll meet again tomorrow at 4:30. 4:30 PM, sir. Don't come at 4:30 AM and ask like, where are you?